Hi, everyone. This is Victoria from Adelaide Capital. I'm very excited to be hosting a crypto day today. Historically, we have not been involved in the space at all, and we've actually been quite skeptical. So, what's changed? To be honest, the sector is just becoming too difficult to ignore. So, the adoption trends that we're seeing are substantial. We're seeing material corporate investment from corporates holding Bitcoin on balance sheets. The institutional investors are getting increasingly involved. PayPal is getting involved and allowing crypto to be used as a funding source. And now you have Elon Musk, who's added Bitcoin to his Twitter profile. So we started researching companies. We wanted to showcase companies that were reputable, had real businesses, real revenues, strong management teams, and also gave a different flavor of ways that you could get exposure to crypto, but all had different attributes that we really liked. So after we spoke with Voyager, Big, Hut 8, and 3IQ, we were blown away. The opportunity set ahead of these companies is huge. The revenues are real. The businesses are here to stay. We are really looking forward to hearing each of them present a little bit later on. But before we get to that, I want to introduce our two keynotes. So we have Stefan Ouellette, who's just joined us now, and Pamela Draper. So Stefan is the CEO of FRNT Financial, and Pam is the CEO of Pateno Payments. They both actually used to work together at BMO in their previous lives. So they come from the traditional financial background. They're really insightful in the space. I'm going to pass it over to them to introduce themselves quickly. But just before I do, I want to remind everyone, there is a Q&A box at the bottom of your screen. If you have a question during the keynote, if you type it in there, we'll get to it. It is a Q&A driven keynote. So feel free to ask, anything that you're thinking about. I have a lot more questions. I'm sure you do too. Stefan, do you want to start by maybe just talking a little bit about your background, and then Pam, we'll move over to you.
Yeah, sure, absolutely. So thanks very much, Victoria. So yeah, Stefan Ouellette, I'm the CEO and co-founder of FRNT Financial. In my prior life, I was an cash equity sales trader, equity option salesperson at BMO Capital Markets, like you mentioned. FRNT was started in 2018 to basically serve to get institutions into crypto in a variety of different ways. We call ourselves a next generation capital markets platform focused around institutions. We're particularly focused on a suite of over-the-counter derivatives that we offer to institutional investors so they can get exposure to the space but settle in fiat currencies. We also operate a variety of block trading technologies in the space, treasury management solutions. We do some advising in the space. So just kind of a full service institutional business in crypto.
Thanks. Pam?
Great, thank you. And thank you, Adelaide Capital, for having us on this morning. As Victoria mentioned, I came from the traditional financial markets background as well. I've spent almost 15 years in corporate and investment banking, most recently at BMO Capital Markets, where I worked with Stefan. I was on the equities desk before I left that and spent some time in capital markets before that. One of my largest clients when I was in banking was a company called Direct Cash Payments, which was a public company. They sold to their largest competitor in 2017, and having spent an entire career in the payment space on the fiat side, the founders broke off with their private bank at the time, DC Bank, and started gaining a lot of exposure to people working in the crypto industry, and thought, wow, the crypto space is really interesting, but don't feel like I could bank any of the players in the space at the time. So I joined the co-founders there to start BitVo, which is a cryptocurrency exchange, and an exchange that we created to legitimize the space versus other options that were available in Canada and globally at the time. So BitVo was our first venture into the crypto space, and I also run a company called Pateno Payments, which provides development solutions for online payments, both fiat and crypto.
Okay, great. So I'm going to kick off the Q&A. And I just wanted to start by talking about recent trading. So we've seen Bitcoin prices hit all-time highs. Then, we started to see a pullback recently. You then have Elon Musk, who's adding Bitcoin to his Twitter profile. There's talk of Robinhood investors getting involved in the space. We've started, to see it come back a little bit. So what exactly has been happening here?
Yeah, I'm happy to kick off there. So the COVID era, post-COVID era, call it. pretty much hits the Bitcoin investment thesis right on the head. You have an increasingly digital world where people are no longer using cash-based solutions and are staying at home a lot more and becoming more comfortable with just their life becoming more internet-based. In addition to that, you have a growing distrust for sovereigns and incumbents involved in, and that kind of plays back into some of the things that you're alluded to that we've heard recently, where a distrust from incumbents is seemingly moving people towards this idea of decentralization, which Bitcoin, as the world's largest decentralized currency, definitely is. And in addition to that, I think that we saw a real maturation in the Bitcoin investment thesis case. Whereas in the last time we had an inflation scare was in 2009, 2010, with a massive stimulus that came in after the financial crisis. And this time what we're noticing is that, investors, whereas in 2011, they were saying, okay, I need an inflation hedge. I'm looking at gold. I'm looking at silver. This time they're saying to themselves, okay, I need inflation hedge. There's very few globally, gold, silver, and a few investors are saying Bitcoin. So the most recent re-rating that we saw in the space, I think, is very much due to what is the consensus view that a growing amount of institutions have decided to make this part of their revenue lines, their business plan, and in some cases their treasury management. So I think that first wave of new investors has incrementally broadened us to this point. And now we're in a bit of a range. We're seeing a bit range-bound trading. It's come off a bit from highs, of course, but we've really seen a lot of bouncing back between this $30,000 to $38,000, $39,000 range. So I think we're looking for catalysts to take us higher, of which there could be several. But I'd call what we're seeing now range-bound trading after a re-rating.
Yeah, and I think the last time that we saw prices really spike like this was the first time that Bitcoin really caught investors' attention, and that was back in 2017. And that was really primarily driven by a lot of retail investors with minimal, if any, institutional participation. I think one of the things that we're seeing that's a bit different this time is some more meaningful institutional participation. Although I would say that I think that's still just starting. And we're kind of really seeing it from two places, I would say. The first is larger institutions gaining exposure to cryptocurrency, and those would be traditional financial institutions, hedge funds, asset managers. But then we're also seeing certain corporations, and to Stefan's point, looking for that inflation hedge, corporations that traditionally held large cash reserves on their balance sheet, starting instead of holding that in US dollars, moving that or a portion of that into cryptocurrency. So MicroStrategy would be the most notable instance of that. It's a large tech company traded on the NASDAQ, but we're certainly seeing a lot of other companies, Canadian and US, in the space looking to convert at least a portion of their cash reserve on their balance sheet into cryptocurrency, primarily Bitcoin at the time.
And so one thing you both mentioned is, starting to use crypto as a hedge against inflation. So traditionally, this has been a role held by gold. So do you start to see cryptocurrencies and the gold asset classes competing with each other for the status, or do you think the two assets should even be compared?
I definitely do think the two assets should be compared. I think that it's tough to see the value of gold as an inflation or censorship. Well, maybe not as inflation hedge, but see the properties of gold that have really made it the store of value historically in the Canadian context. I mean, gold as a store of value is really, is related to a couple components. I mean, first of all, it's the limited nature of its supply. Let's say that. And then second of all, the idea that it's something that you can hold outside of a bank, and, under your bed, arguably, that if all the financial system started to evaporate or, you saw massive defaults, you could actually go back to trading with gold. And, I think there's a lot of issues that brings up for gold, such as, it's not infinitely divisible like Bitcoin is. And in addition to that, it's very hard to transport. So you could really only limit yourself to bringing around as much gold as you could carry in however you were doing that. So I do think that from a store of value perspective, this idea that I stand with my assets alone without a sovereign or a bank in between myself and my asset is very similar to gold. And then in addition, the limited nature of its supply is similar to gold. So, while as I think that Bitcoin has additional features, such as its viability as a payment mechanism, et cetera, I definitely do think it holds gold-like properties.
Yeah, I would say gold-like properties, absolutely, but then also some potential advantages to it as well. When you consider the actual physical storage of gold required, maybe looking at Bitcoin, it's like moving gold into the 21st century or the next era. You have this asset that has had value, has proved to hold value over time, is independent from any government and independent from the ability of any government to print more currency, but also has that limited supply. So similar to how gold in the earth has limited supply, they can continue to try to mine more. Bitcoin does have that limited 21 million maximum Bitcoin supply as dictated by the code without some of the physical storage constraints as you might see in a gold. So the way I kind of think of it, it is comparable gold. It should be at this time for sure, but it also has this kind of new era look and feel to it, bringing an asset like gold into today's day and age.
And then Pamela, you had mentioned too that we're starting to see, companies holding crypto on their balance sheets. So I think the last stat that I saw was this is around about 5% of Bitcoin outstanding now. So what does this start to do to the supply demand dynamics? And does this offer a little bit more stability to the coin, or what are you guys thinking?
It might offer some more stability, but I think the effect has really been seen in this last push from, you call it US $20,000 per Bitcoin to US $40,000 per Bitcoin that we've seen recently. So that US $20,000 per Bitcoin was the previous all-time high hit back in 2017. And now we've touched US 40,000 and we've dropped down a little bit today, kind of sitting at US 36, 37. And I think a lot of that incremental demand and stability around the mid US 30s has been brought on by some of that more traditional financial institution and corporate interest, just providing that consistent bid. It's still very small in terms of who could potentially gain exposure to it, but that incremental demand, I think, is helping with the stability that some of that you're seeing right now. Whereas last time it hit 20,000 and quickly kind of dropped off, there wasn't that retail support behind it. Whereas now you have the retail frenzy, which is driven and similar to what we're seeing in the Robinhood type traders, but you also have that continued push by corporates gaining exposure and traditional asset management type gaining exposure as well. So I think it's helping with some of the stability that you're seeing now.
Yeah, and to speak to that, I think that this discussion around supply and demand is framed a little bit incorrectly. There's this idea that, oh, there's only 21 million Bitcoin out there, therefore I need to get my Bitcoin before someone else does. It's not exactly how it works. Bitcoin is infinitely divisible. So if someone's saying, okay, well, you can't have a handful of institutions taking 5% of supply off the market, there's going to be no Bitcoin left, which is kind of the way it's being framed right now. I'd say, you can't have 10 institutions taking 5% of supply off the market. The market needs to grow, right? You can't have at this rate, we're going to have 100 institutions that, 200 institutions take the whole supply off the market. So that's not sustainable. What will ultimately happen is that if these firms who seem quite price insensitive as well, I think I'd add that into the additional kind of stability in the institutional landscape, is that, some of these firms like a Mass Mutual, for example, they didn't buy Bitcoin, in terms of what they stated. They didn't say they bought Bitcoin because they had any kind of bullish price appreciation. They just viewed it as an asset that was going to be uncorrelated from their US dollar exposure holdings, which are, from the way that they look at it, declining in value every day. So this idea that these corporates are looking for it as a diversification tool, not even looking at it from something to see some capital appreciation out of, is very bullish for that kind of support bid that Pamela is referring to, where it's like, I just want to get away from the US dollar a bit. I see this as an alternative asset. So I'm not really in it if it goes up. If it goes down, great, I'll get some at a cheaper price. So that mentality has been, I think, is extremely supportive to the space. Who knows if it sticks around in some major sell-off or some crisis. We'll get a chance to see what it does. But if institutions are going to continue to get in the market at the rate that they have, the market needs to get bigger to support them.
Yeah, it's interesting. It seems like the announcements of, corporates adding Bitcoin just continue to keep coming. So I want to steer the conversation a little bit to talk about adoption. So we've been seeing a huge increase in trading volumes. We've seen a huge increase in people opening up wallets. and lots of news headlines talking about institutional investors, just as we've been talking about, increasingly getting into the space. So, I mean, both of you guys have a bit of an inside look in terms of what's going on there. So I just wanted to get your take of what you guys are seeing on your desks.
Yeah, so I mean, we founded this company with the idea that, okay, maybe institutions, in 2019, it didn't really look like institutions were going to get into this space anytime soon. I mean, we thought that they would, because we felt that there was enough trading opportunity in this space to be able to create a suite of products that would be interesting in any crypto environment. But it didn't really feel like they were getting into this space. Now in late 2020, it went from an asset class that institutions were kind of looking in the peripheral like they have for the last few years to being another front and center. We need to decide how to participate here. What we're finding is that we've built all these business lines under some assumption of how these businesses would act. And we've had to be a little bit more adaptable, because some of these institutions are looking for closer hands-on relationships. They're saying, we've had conversations with some really large financial services firms. And when we say something to them like, okay, well, why don't you just trade with our desk? Why don't you look at our derivatives, et cetera, et cetera? They've really said to us like, whoa, we don't even know where to start with all that. Why don't we set up why don't we set up a closer relationship with you and work towards building a product together that we can offer internally, for example? So what we're finding here is that it's not as so much that institutions are ready to kind of jump in and do this on their own, but they are really looking for partners to help guide them through the space. And for what I like to say, to make it so they don't hurt themselves on a sharp corner, because they don't necessarily have the internal expertise to navigate this, very new and, oftentimes kind of Wild West looking like space.
Yeah, we're certainly seeing adoption increase on both our retail as well as the institutional side on our desk. So in terms of new retail clients, we're seeing that Robinhood type spike where there's a rush of new signups ongoing every day. And then also institutions, and I wouldn't say traditional financial institutions on our desk, but corporates more so, or crypto funds that are growing in size, dedicated to the asset class. For sure. So you're certainly seeing that. But Victoria, you touched on adoption, I think, with respect to both people buying crypto, but I think also maybe you're talking about the use cases, and that would be anywhere from gaining exposure as an inflation hedge to potentially using it as a form of payment as well. I think Bitcoin in particular will be more challenged to be that form of payment because it is slower on the blockchain. But you do have thousands upon thousands of different cryptocurrencies that have been designed for specific use cases, some of them in the payment space, some of them in the smart contract space. So I think one of the themes that you'll see there in terms of adoption and the number of different cryptos out there is I think you'll see a consolidation as the space legitimizes and sort of finds its way. And I think the reduction in the number will relate specifically to those end use cases and adoption of those use cases that you talked about, Victoria. So maybe a handful of cryptocurrencies win out in the end. Maybe Bitcoin is that store of value akin to a gold or an inflationary hedge. Ethereum underpins smart contracts which can be used in decentralized finance applications. XRP, although it is having some legal issues in the US currently, was designed for that cross-border payment remittance. And unlike the Bitcoin blockchain, really speeds up the both speed and efficiency as well as in terms of cost for remitting payment across border, or just even person to person within a country. You can send someone payment within a few seconds for fractions of a penny on a dollar. So I think in terms of adoption, you see those end use cases be addressed by specific cryptocurrencies in the space, and certainly Bitcoin doesn't address them all, but there may be another handful that go specific to those adoption needs.
So I guess talking a little bit more on payment. So PayPal obviously brought a lot of awareness to the space when they came out with their announcement that they're going to allow cryptocurrencies as a funding source on their platform. But how does implementation of this actually look like if people are, buying crypto and then trying to use it as a payment source? Are there tax implications for selling crypto, or how does that actually work, I guess, in real life?
Yeah, I mean, certainly, Stefan and I would both give the disclaimer that we're not accountants and you should seek tax advice from your own accountants. But I think the general theme is this isn't a special asset class different from any other trading vehicle that you'd have, and it should be treated accordingly. So if you are trading it and earning a capital gain on the trade and it's in a non-tax sheltered account, then you should seek to pay capital gains on the assets as you would for any other trading asset. If you are a day trader and your primary income is being earned from day trading assets, then perhaps it's treated as income tax on your year end, but certainly seek proper tax advice on that. But there is some people in the early days of adoptions tried to get away from paying taxes, tried to use the anonymity of some of the wallet services so that it wouldn't be attributed to them. But I think at the end of the day, like I said, there's nothing about this that would circumvent that. It should be treated as any other asset that you're trading and taxed in the jurisdiction of your residence accordingly.
Okay, so I've just had a question come in that I wanted to get to because it's a topic that I wanted to address as well, is just on central banks and how they're exploring their own form of digital currencies. And so the question is, they would like to hear your opinion, on central banks' future adoption of cryptocurrencies, and also that they've read an article on coin ID for the healthcare system. And can you guys comment on this?
Yeah, I mean, I think that the easiest thing to comment on that is that central bank digital currency item, which is been thrown around a lot, and I think that it's been talked about in the media more than it's actually been really hashed out by central banks. I think that the idea around a central bank digital currency is actually much less solid and known in terms of what it'll ultimately look like. And it's important to note, I mean, that philosophically, central bank digital currency is pretty close to the opposite, besides this digital element of what cryptocurrency had intended itself to be. Central bank digital currency, if you think about what we have today, we're pretty close to a central bank digital currency. There's small cash components that are involved with this kind of thing, and really it's more kind of bank led. It's private markets that are seeing all the data from different transactions. The idea behind a central bank digital currency, the thing that seems to be evolving is that, there's two components. One, it's going to remove cash, so that all under the table payments, whether it's to, a babysitter or, something more illicit, would be eliminated. So great. So they can get governments can get tax revenue on that now. And in addition, that they could actually monitor your spending directly, as opposed to having to go into a bank and figure something like that out, which has a lot of privacy concerns, which is the exact opposite of cryptocurrency, which was really, my private keys, my coin. There's no sovereign that can take this away from me. There's no bank that can freeze a wire. So in a lot of ways, the two things are very dissimilar. I think I don't think it's a surprise that a country like China has been the most aggressive on central bank digital currencies, when, I think everyone would be far pressed to say that China is looking for democratic solutions for its population. Historically, they've been much more shown to try to control and understand the habits of their population much more. And so they've made far more inroads on this than any other major nation. So, central bank digital currency, very far away from cryptocurrency. And then to the second part of your point, I mean, there is a lot of just, let's put everything on a blockchain. That was something that came out of 2017. In my opinion, that had more to do with people trying to deny cryptocurrency, but still recognize an innovation. Really, blockchain technology has worked very well for one global use case, cryptocurrency. Everything else has been some form of speculation in that it could help. And oftentimes I think people underestimate just how useful a central ledger is and how more cost effective it is than running an entire blockchain on a particular process, where to make any new transaction, you have to reproduce every single transaction history of the blockchain. So, so I would say to the first question, central bank digital currencies, not cryptocurrency, some other thing that governments are trying to do to control their populations more, to be honest. And second of all, and the second thing is that, you mentioned that you'd seen something blockchain on something else. I mean, there's just a ton of these things, and there's been very few successful use cases that have existed beyond, blockchain's use to have a global cryptocurrency.
Yeah, I think net is actually positive for cryptocurrency for some of the points that Stefan touched on. First of all, it doesn't compete with cryptocurrency because it still is tied to a government and at the whim of the government to increase or decrease the value of the cryptocurrency, which is what cryptocurrency was specifically designed to avoid. But also I think the second positive to it is that it helps increase adoption and it helps build out that infrastructure for digital assets. So the infrastructure for digital assets has been building on a country by country basis as well as globally. But I think having governments could delve into the space, both from a storage, a transfer mechanism, you'll help build out that infrastructure across the globe and also increase people's comfort in transacting in digital assets overall.
And I guess too, there's been talk of some countries, so India, for example, talking about banning cryptocurrency use like Bitcoin and then just adopting their own central digital currency. So I guess what are your thoughts there?
Yeah, I mean that's exactly what I'm talking about, right? Like they're very different things. Like the idea that India is basically saying, okay, we see some elements of this blockchain based currency that will actually allow us be able to manage, to be able to watch our population spending habits more, ensure few black market transactions. But what we don't want is this currency that we have very little to no control over.
Right.
People can move around freely with their currency without having to go through the banking system. So I think that's exactly what Pam and I are saying, that it's very different. In Pam mentioned like the economic philosophy behind it, completely different economic philosophy. One, it's basically just swapping out one for the other and a little bit more government surveillance. Like all the things that governments say Facebook does poorly with your data, they want to do themselves, with this whole other element of financial data associated with it. So I think that's what India is trying to do.
Exactly. Right. It's the ultimate play for financial control and data control. They're saying ban everything for which we can't see and can't manage, and take all of that in-house in our own central bank digital currency instead.
Yeah, that's extremely aggressive way to go about it. I mean, even China isn't really doing that. They've kind of banned cryptocurrency, but that's about as aggressive as they can say to crypto.
Agreed.
Okay, so I want to move the conversation again, just because there are a few things that I want to get to. Regulation is the next topic that I really wanted to talk about. So it seems like, lack of regulation in the past has been a big deterrent for investors. However, now, regulation is picking up. It seems globally this is becoming definitely a focus. And so what should we be watching for in terms of regulation catalysts that are up and coming?
In a way, I think it's surprising that the regulation has come on as slowly as it has. If you look at the global market capitalization of cryptocurrencies right now, we're over $1 trillion in aggregate. And Bitcoin makes up the bulk of that at about 2/3 of that value. So you've let something grow to that size and remain largely unregulated. I think there's kind of two camps across countries that have taken a look at cryptocurrencies and said, okay, we're going to develop a specific regime for cryptocurrencies that is specific to that asset class, and countries that have looked at it and said, okay, let's try to fit cryptocurrencies into the existing regimes that we have, whether that's securities laws or anti-money laundering laws. I'd say most large developed nations have tried to fit it into the existing regime. And while it has been slow, I'd say they're picking up quite quickly now, particularly in the last 1-2 years. The US is starting to really kind of close in on how they're going to look at things and releasing a lot more information about it. Home here in Canada, I think we're getting close too. So last year, FinTrack put in place an anti-money laundering know your client regime around cryptocurrencies, kind of bringing that into the existing infrastructure. All cryptocurrency platforms dealing with retail investors had to comply with that as of June 2020, and they're increasing the regulation as of June 2021. So it was a staged introduction. And the Canadian Securities Association, by the various provinces, is in deep discussions with each crypto platform. They released formal guidance in January of 2020, and have been talking to the various different platforms about things such as custody, whether or not you should be an IROC dealer, et cetera, over the course of the past year. So it does seem at home here in Canada we're not there yet, but moving closer to having these assets pulled into our existing regulatory framework.
I think that there's been a variety of reasons why regulators have had a tough time with crypto. I mean, I think that it definitely has trouble fitting into a lot of their buckets in terms of, there's a lot of components that make certain cryptos look like securities versus others that look like commodities and currencies. So there's a lot that's confusing there. And in addition, I think that one of the real themes that will continue to play out in the market is that the idea of regulation. I think that when we say something is unregulated, it really means it has no U.S. regulatory status, right? Like that's really kind of unregulated markets for the G7, and you've had the vast majority of crypto liquidity and crypto innovation that has evolved without any U.S. regulation. Like they may have been involved with FinCEN and done anti-money laundering, abided by anti-money laundering laws, et cetera, but they have never had U.S. regulation, and that's really like probably about 75% of the liquidity that exists in the space. So now you have this institutional push, this real idea that, you want to create something in crypto in the US and, friends of the US that looks similar to what we have with traditional financial markets. But these are very regional regulatory strategies for a market that's very global and fully fungible. For example, if you want to make equities regulation on US equities, you don't really have to worry about China having a different set of regulations around US equities, right? It's kind of, the US regulator can control the equities that are issued in their own jurisdiction. With crypto, you have, some regulated products that you're launching that may be unintentionally involved in liquidity pools that are pulling from unregulated platforms like the CME Bitcoin future, for example. That's a regulated product. What's to say that a market maker in that product is not hedging themselves on an Asian-based unregulated exchange? There's this real, I think, friction that's going to evolve over, hey, the US is like, we're doing it this way, and the global crypto market that goes, we don't really care how you're doing it. We can just operate as we do. So I think that, I'm not looking as much for a catalyst amongst regulators, but continuing to look for more issues that spring up between these offshore markets and these US markets.
Yeah, and that's a good point too, because I guess we are so programmed just to look at, securities and regulations within our own jurisdiction that you almost forget to look a little bit broader for something like this. So I want to spend just a few seconds. There's been some audience questions that have come in. So just quickly, I want to run through a few of them. So first of all, your thoughts on Michael Saylor hosting the BTC discussion today with 1,400 companies, including some Fortune 500 companies, where he's going to be covering, legal considerations that firms are going to face and how they can integrate Bitcoin into their business models. So just what are your thoughts on that?
Michael Saylor has come out of nowhere as just becoming this huge proponent of Bitcoin.
Yeah.
And, he, by his own admission, he kind of didn't really think much about the space in March, April, even of 2020, but then came to some mea culpa where, he realizes that the US dollar is going to get infinitely devalued and that Bitcoin and cryptocurrency are what's going to end up, holding value. So he, for those who don't know, made a huge decision to basically take the majority of his treasury for a technology company that he operates called MicroStrategy, which has nothing to do with any cryptocurrency or anything like that. They're like technology service company, take their entire, the majority of their treasury and plug it into a Bitcoin purchase, which they're holding. And it's done very well for him because the timing just worked out where, Bitcoin, I think he started making his purchases just above 10,000 and it's tripled in the meantime. So he looks like, a very smart person in all of this, just given what the price has done. But he's used that kind of probably luck around timing to try to continue this momentum and to educate other corporates around how they can, get into BTC. He states quite easily, maybe there's, maybe it could be fudging, but this whole day is built so that he can basically transfer his playbook to other corporates on how they can also own BTC on their treasuries. So, I mean, we could wake up to announcements over the next couple of weeks where due to this, several companies have decided to put it into their corporate treasuries. And, it does not take very much to move the needle in Bitcoin. It's still a very tightly held market. The float's relatively small for people that are actively trading it. And if 10 institutions out of the 1,400 that have signed up for it, apparently, come out of that and say, you know what, we're going to do this, that is going to be huge for Bitcoin. So it's definitely something to watch. And Michael Saylor himself and what he's saying has become a very important person for this wave of crypto interest.
Yeah, the only other thing I would add there, because I think it's really interesting in terms of institutional interest, is not only did he convert the bulk of his cash reserve to Bitcoin, he also, just before the holidays, issued a convertible bond for which the sole use of proceeds was to purchase more Bitcoin for his balance sheet. And I forget how many times they upsized it, but I think they upsized it twice and doubled the overall amount from about 400 million to 800 million of demand from US institutional investors wanting that convert. Issued by MicroStrategy, the Nasdaq-listed company, which, as Stefan mentioned, isn't a crypto company, but just a tech company. But knowing that when you buy that and when you buy their equity, you're getting that exposure to the cryptocurrency as well. Bitcoin primarily is the only thing they bought.
Right. Yeah, that is interesting. Is that the only time that we've seen that, I guess?
That's the only thing I can recall for a traditional bond type instrument or equity raise issued to purchase cryptocurrency.
Yeah, I mean, they're taking advantage. I mean, they're taking advantage of the zero interest rate environment. It was a very smart structure from Saylor's perspective. I mean, they really are paying very little and only giving up some of the upside to grow this Bitcoin shell bet that they're trying to make. So in terms of getting massively long Bitcoin, it was a very smart way to go about it. I mean, Saylor's basically just done this in a bull Bitcoin environment. Let's see what the market says in a pullback, which will ultimately happen at some point. So we'll see. But for now, not only has he gained off of his opportunistic Bitcoin purchases, but is really sounding the drum and could, kick off another leg of Bitcoin ownership himself amongst corporates. So it's been very, very interesting to watch.
For context on timing, he only started doing this in August of 2020.
Yeah.
It's relatively new.
Perfect timing.
Yeah.
Okay, so we only have a few more minutes. There's just a few more questions that came in. So this one I think is interesting. So how do Canadian institutions view XRP given what's going on with the current SEC position into them?
I'd say incredibly cautiously. I mean, when you have a lawsuit like that outstanding against you in the US and especially for Canada, we're the next door neighbor to the north, we're going to watch that decision very closely, and I'm sure our regulators and our lawmakers are watching that decision very closely as well. Should there be a negative outcome, I don't think it's unreasonable to think that could trickle across the border. So I would say very cautiously.
Yeah, I know. I agree. There's been a bit of a mix of responses from exchanges in terms of whether or not they've decided to continue to list XRP or to remove it from their offering. I don't think in Canada you can expect any kind of respite over a U.S. decision. I mean, especially in crypto, the OSC has been cited in several cases that the SEC has taken against crypto companies for their help. I mean, it seems very clear that to where the OSC can piggyback on SEC legislation, they will do so. So they don't mirror the market. They don't mirror US regulation one for one in terms of the way that they're viewing crypto. But for a large decision like that, I think from their perspective, they're viewing it as a help on resources. We'll just copy what the SEC says here. We don't have to do our own incredibly complex evaluation of whether or not XRP constitutes a security. We can piggyback off of our friends in the US. So that's my expectation in terms of what's going to happen there.
And then can we just talk quickly about the DeFi ecosystem and what kind of disruptions you think we're going to see in the financial industry in the next few years?
Yeah, I mean, so DeFi is interesting, especially given the Robinhood stuff. Like the Robinhood stuff, just to say it quickly, has played perfectly into DeFi's hands because, DeFi basically took decentralized currencies and says, well, let's decentralize everything. So next thing in the financial sector is exchanges. And I was saying to myself, like, what demand use case are you fulfilling there? Who is saying to themselves, oh, exchanges, are brutal. We don't want exchanges anymore. Centralized exchanges, forget it. And then all of a sudden this week, everyone, is now thinking that Robinhood's rigged, the markets are rigged against you. So we need to go into something that can't have its rules changed on a dime. Well, that's DeFi and decentralized exchanges. And that's what they've been saying that they are doing, very loudly for the last, 18 months. DEXs have existed for a while, decentralized exchanges, but really started to pick up the pace, in 2020. That subsector has grown a lot. It is very, very new. DeFi, there's been plenty of protocol failures so far this year. In addition to that, I'd say that DeFi has a lot of characteristics that the ICOs did, where it was very much where ultimately the story of ICOs is that they were a regulatory workaround, which the US said you can't do that. I think there's a lot of components in DeFi that would say that deserve a lot of regulatory scrutiny from the way that US regulators look at it. And, it generally takes them about a year to put these cases together. So, and DeFi has really just picked up over the last, call it 9 months. So I think DeFi has an interesting narrative right now, but there's a lot of concerns.
Okay, I'm just going to end it with one last question because we are running out of time. I'm sorry if I didn't get to your question. If anyone has a question that they didn't get answered or anything else that they want to hear from Stefan or Pam, if you email myself or email Adelaide Capital, we can get that answered for you. So just to wrap it up, so when you start to research, cryptocurrencies and Bitcoin and DeFi, it can definitely be overwhelming. There's a lot of technology that's involved. It's a new language. So just what would you guys say to new investors that are trying to get involved in the space? Where do you start? Any advice?
My advice, and it doesn't relate specifically to crypto or the infrastructure around it, but it's with any investment that you make, you have to understand the underlying use case. I think it's so applicable to cryptos because, like I said, there's thousands out there and thousands of DeFi protocols. But the ones that will have real value at the end of the day and over time are ones that serve real use cases that are desired today and that fill a void in the traditional financial system or otherwise.
Yeah, I would just say that if anyone wants to sign up for the FR&T Financial morning note from this call at frntfinancial.com, they're welcome to. We put out a daily piece we send to our institutional clients that anyone could be involved with on the call here.
Okay, yeah, thank you so much for both of you coming on. I really appreciate it, really insightful. And again, if anyone wants to follow up with any questions, just email us and we'll be able to get back to you on that. So thanks, Stefan. Thanks, Pam.
Thank
you.
Great,
guys. Thanks a lot. Good luck with the rest of the conference.
Thank you. Okay, so we're going to move on. We have Steve Ehrlich, the CEO and co-founder of Voyager, who has joined us. So Steve, I think you're on mute. I see that you're, there we go. So we have Steve with us from Voyager. Voyager is an independent brokerage that provides a turnkey solution to trade crypto assets. Their success over the past year has been nothing less than exceptional. A few stats I saw relating to the company last week where, they were adding 100 new accounts a minute. They saw an increase of 250,000 new accounts over 3 days. And they were also one of the top apps being downloaded on Android. So congratulations to all of your success, and I'll pass it over to you. You'll be able to screen share at the bottom your presentation. Perfect.
Yeah, I'm going to do that now. There we go. Can everyone see that?
Yeah, you're
great.
Good.
So thank you first for having me. I really appreciate everyone taking the time, learning a little bit more about Voyager. We are the fastest growing digital asset broker in North America. We are publicly traded on the Canadian Securities Exchange and the OTC markets. Here are some of our legal disclaimers and forward-looking statements. Feel free, go to our website, check out our website, and you could find the presentation there as well. And you could take your time and read those disclosures if you so choose. Now, a couple of things that make Voyager different, and what sets us apart from the competition. When we set out about 3.5 years ago to build our product and build our business, we wanted to have some real big differentiators to the marketplace. So first and foremost, we brought to the market a really easy to use mobile app, and we've just launched a desktop in beta. Now the mobile app is set with the idea of crypto made simple. You basically can download the app and get through funding and start trading in 3 minutes or less. So we made it a really comfortable, easy experience for consumers so that they could enter the crypto markets in a really fast, efficient manner. But then a couple other things that we built our business on was the fact that we have over 50 different coins today, and over 20 of them you can earn interest on. So you get the ability to trade and earn interest on those coins with up to 9.5% on some of the coins, including the USD-backed stablecoin USDC. Additionally, you could trade your Bitcoin, earn 5.5%. So we came to the market with this concept of creating wealth for consumers, for retail consumers. We're a retail product. And then lastly, on our differentiators is the fact that we're connected to the world's markets, to US markets, world markets, market makers, OTC desks, as many liquidity providers as we can route to make sure we have the fastest execution and deepest pool of liquidity we can provide. And then one other one that we throw in here too as well is we've built a community. We have our own token called the Voyager token, which is our loyalty rewards. People get extra interest, get discounts, and there's a new program that's coming out in the near future as well. But that community has really helped us grow the business because of the loyalty and what they earn from holding the Voyager token. We look across and say there's 4 big investment highlights. I will touch on all 4 of these over the presentation. The massive market opportunity. I mean, Victoria, you guys you talked about it before this. How big is this opportunity? I think I heard Stefan say it's about, or maybe it was Pam, talk about $1 trillion market cap of cryptos, with Bitcoin being 2/3 of it. That's just the tip of the iceberg. The gold market cap is, 8 to 10 times larger, averaging around 9 trillion. But then the total global investable assets is so much greater than that. And we strongly believe, and you guys were touching on this, we strongly believe that where we're going with the disruption from last week, with decentralized finance, all those aspects, that blockchain crypto is the future. Securities will be traded over the blockchain. Settlement will happen on the same time basis, on a real-time basis, and not T+2. All these things will happen through the use of cryptocurrencies in the blockchain. Obviously, we believe that the traditional financial systems are ripe for disruption. 24/7, 365 access is what you have in crypto. It doesn't get shut down at 4 o'clock. You have to worry about after hours markets. You can access your money and trade cryptos 24/7, 365. Additionally, you can move money across borders instantaneously. And I know folks who have tried to move cash from their bank to another bank on a Saturday or Sunday. Good luck. Doesn't happen. You can't do it. Maybe you could do a little bit on some of those retail-oriented Venmos or PayPals, but try to move significant money somewhere else to get something done, business accomplished on the weekends, doesn't work. Can't do it. One of the examples I like to say is that over New Year's weekend, we had tremendous volume coming in our platform. We had to move assets across the globe very fast to continue to effectuate transactions for our consumers. Well, if we were in the traditional banking system, we would have had to stop trading. We would have had to restrict the trading. That doesn't happen with us, because what we do is we move the coins across the globe and make sure customers can trade 24/7, 365. And we can do it really inexpensively, where the traditional systems are expensive. And then also, there's a lack of trust in the markets today, with banking today, and people are looking for alternatives, and cryptocurrency is that alternative. And if you don't believe me, Ben Bernanke, the ex-chairman of the Federal Reserve, you can read it anytime you want on our website. But virtual currencies are here, and they're only taking a bigger impact into our ecosystem today. About Voyager, and now as I turn to why we're such an attractive investment from our business, we ended the year at 40,000 customer accounts, funded accounts, at December 31st, 2020. We did a press release January 11th. We already had grown our accounts 25% over 10 days, and it didn't stop through the month of January. We have a goal to reach 1 million accounts by 2025. I believe we're going to significantly exceed that goal. And in addition, at the end of the year, we had accounts averaging about $4,500 per account. That's grown significantly. So if you take the number of accounts we expect to have by the end of 2025 with the average account size, which again is still growing in January, we believe we'll get to 20 billion of assets by 2025. And again, we significantly believe we'll significantly exceed that target. Where are we today? Last public announcement, we had over 500 million of assets under management, over 50 digital assets, 20 of them which bear interest. Business is still growing from that last time that we announced that those numbers back in mid-January. Today, we're regulated in the US. We're members of FinCEN. We trade in 49 states. We're working in Canada with the OSC to get our exemptive relief and hopefully offer our services in Canada in the near future. And in Europe, in December, we acquired an entity called LGO, which is a regulated entity by the AMF in France. And we're working with them to bring our entity to the retail public in France and in Europe in 2021 as well. And if you see everything I'm saying is all about, we're bringing retail product to consumers to make these markets fair to all retail consumers. our timeline, some of the things we've been able to accomplish in 3 short years. We became a publicly listed company. We launched an iOS and Android app. And by the end of 2019, we really had about 5 million of customer assets. And you can see our timeline here that by the third quarter of 2020, we're at 150 million and to 500 million today. We've also accomplished 3 acquisitions over that time frame. I previously mentioned the LGO, but before that and prior to that, we had acquired the Ethos protocol, which is an IP protocol that allows us to offer crypto transfers on our platform. So you can bring crypto in as a crypto deposit or take it out to your own wallet if you want. And that was all effectuated because of the Ethos transaction in October 2019. And we also acquired the accounts from Circle in March of 2020, which really expanded our brand, expanded our customer base, and got us to start growing. Why is our business model attractive? Well, we get customers coming in for 4 main reasons. One is we get the true BTC believers, the BTC investors that want to buy, hold, earn interest with BTC. Then we got those that are just yield seekers. They're bringing USDC in or USD, they're buying USDC coin on our platform and want to earn that 8.5% to 9.5% interest on a dollar-backed stablecoin. And think about that, a dollar-backed stablecoin at 8.5%, and you get an extra 1% if you hold a certain amount of Voyager tokens. 8.5%, you go to your bank today, put your money, they may make you tie it up for a year to get 1% in the CD if you get that much. So this is free money that you can actually take your money out anytime you want and earn 8.5%. We get a lot of customers coming in for that. We get the altcoin seekers, those that want to buy Doge, those that want to buy IOTA or Tron outside the top 5 or 6 coins. They come to Voyager because of the multiple coins we actually offer. And then there's cost conscious. When you look at our pricing compared to the landscape, our average spread on BTC is 40 to 50 basis points. Comparative products in the marketplace are charging 2%. So think about buying $1,000 worth of Bitcoin. It's actually got to go up 4% for you to actually make any money. 2% price, commission on the buy, and then 2% on the sell. It's got to move 4% for you to make any money. That seems a little prohibitive to me. But so we're a cost conscious player in this marketplace. Our business is growing, as I mentioned. Our AUM is up over 100 times in 13 short months and growing from there. Our unit economics, when we acquire a customer, we're getting that payback in a couple of months or less, which is incredible in this type of in a financial services industry. And we're expanding our operating leverage as we keep putting more and more of the revenue we make to the bottom line. Now, I'm going to talk about our revenue streams and how we make money. There's 4 main streams. The major coins, the altcoins, interest, and then we make some listing fees. But the 2 main ways we make money are interest and on the spread that we charge on trades, which I mentioned on the Bitcoin side of the world is between 40 and 50 basis points. It expands up on some of the altcoins. So an easy way to understand our revenue model is you take our AUM and you times it by about 10%. When you do that, that's the expected revenue that we should have because it comes from 2 components. The first component is the trading revenue. And I'll explain that on this slide, the trading revenue. So our trades, our customer assets tend to turn over and get traded 1.25 to 1.5 times each month. So if we have 500 million of assets, we expect to see about 750 million of trading volume, principal value traded in that month. We earn about 60 basis points on average across all the coins on our trading volume, 7.2% per year. So that's one component of our trading and our revenue. The second is the interest we earn. We earn somewhere around 4%, 4.5% on all the assets that we make over the year because of our lending program. In our lending program, we lend assets out to some of the biggest players in the industry, whether it's Galaxy Digital, a publicly traded company on the Toronto Stock Exchange, or to BitGo, a $1 billion custodian backed by Goldman Sachs, or to Jump Capital, one of our trading partners. So we will lend coins out to them, make interest on that, which we give 90% of that back to the consumers. So you take 4.5%, 4 to 4.5% on interest, 7.2% on the trading revenue, you get to over 11%. Trading revenue, by the way, we earn about an 80%, 85% gross margin. You get to over 11%. Conservatively, we say 10%, take 10% of our AUM. That's the revenue you'd expect to see from us on a go-forward basis. Now, other key metrics that we have. We've been adding net deposits on our platform, so net new assets to our platform at the rate of 6 million plus per day, and that's continued from the last press release we've had as well. Other metrics that are really important: account acquisition. I mentioned earlier, we get a payback of less than 3 months. Our account acquisition is about $35 per account, and we're getting the revenue on that of about $30 per month. Obviously gross margin's less, so our payback is less than 3 months. And up till January, we were seeing this 20% month over month growth. As previously mentioned, we did a 25% growth in 10 days in January, and the business has not stopped from there. So really key metrics to understand how Voyager is going to grow its assets, grow its customers, grow its revenue. Some stats, again, just to show it in chart form. 500 million of assets in January. We're at 5 million in December 2019. I don't know how many companies that can say that they've grown 100x on their assets over that short a period of time. An interesting stat we just came out with just on Monday was we processed over 1 million trades in the month of January. At the same point of December 2019, we only processed 8,500. So that's 117 times growth, again, in a 13-month period. So we've just seen the adoption of Bitcoin, the adoption of cryptocurrencies. The previous folks were mentioning this when they were discussing. There's a continued adoption, and we're focused on the retail side of the world to make sure we could keep this growth going and really start to continue to grow our business. How do we get our customers? How does Voyager find their customers? What are the marketing channels that we use? And we call it our interconnected acquisition experience. In a way, as some people like to use the word flywheel, that's, our acquisition experience. First, we have our typical paid advertising efforts where we use digital ads, paid search, and we try to grow customers' awareness through that. Also, we've been working on content marketing since the very first day we started. We send out our own news, own information twice a week. That information all gets distributed out through some of our strategic partners. Market Rebellion, run by John and Pete Najarian and Dirk Muller, to their thousands upon thousands of consumers wanting to get education on options and equities and cryptocurrency. Our newsletters get out to that distribution network. To Sterling Professional Trading and their active trading platform that also uses our platform to connect people to trade cryptocurrencies. They get their news out. To guys like Benzinga we work with and make sure our news gets out through our partnership and channels with them. So we have a really big content marketing channel for us on the acquisition front too. Social media, in just the last month, we've grown our Twitter followers by 25,000 in one short month. So we're growing our social presence and growing how we connect with our consumers, because it's really important in a retail business to make sure you connect with your consumers. We're trying to be responsive to all their concerns and issues, and we're vastly different than many others who don't use that channel. We use social to really engage with our consumers to make sure that they become advocates for us on the long term too. Promotion, sponsorships, we do some of that. We have some small sponsorships we do. We also work with some YouTube channels, Trade the Chain, Daily Asset News, that are big advocates for us. We work with them and try to make sure we can bring our services and bring information, and not just about Voyager, but about cryptocurrency to the masses. And then lastly, our affiliate and influencer relationships. We have a lot of influencers in the crypto space. We have some in the sporting world too, and we've tried to blend both those worlds. Guys like Tracy McGrady, Marshall Falk, Stephen Piscotty, Matt Barkley, are all advocates for us and help us push the word about Voyager out into the marketplace, as well as just to educate consumers on cryptocurrency. Some of our differentiation versus the customers. You have some of the exchanges, every one of the exchanges has one point of execution. It all goes through their exchange. They don't push any order flow out to others, where we aggregate order flow and have many points of distribution. We have more coins. We have more interest assets for consumers. And as I said, totally unaffiliated exchange routing. We try to find the customer the best execution on every trade. And that's what allows us to keep our model being a retail friendly model. Where are we going? How are we also going to grow? Because there's two ways we're going to grow our revenue. It's the organic way. It's three ways. The organic, as we keep advertising, there's product expansion, and then there's international expansion. On the product side, we're bringing the desktop to market. We have it in beta right now. Over the next month, we think we can get it out to more consumers and really get more people to use that. It has great charting capabilities that are homegrown, not using a third-party service, built by us, that we're really excited about. We're working on a debit card, credit card margin, trading crypto for equities. That's one of our projects that we're working on. As I mentioned, we're partnered with the Nigerians and Dirk Muller, massive experience in the equity world, just as myself. And we're looking forward to bringing something out on that front. And then building out our top of funnel by the international timeframe too, and the international distribution as we actually go to Canada and Europe in 2021. This is all backed by our scalable infrastructure. The Voyager everybody sees is the mobile app and the desktop. They don't really see the API, but it's there. We get a lot of micro banks examining our API, looking to hook up, adding their customers, crypto trading through our APIs. But then the part you don't see behind the scenes is a custom built market data and pricing engine, our own order management system, our own smart order router, our own databases of customer information, our own wallets that we do for consumers. All of these things are all homegrown and built, which increases the enterprise value of what we're building. And behind even those pieces, you have a secure unified wallet and custody. We have data science and marketing and a whole automation tech stack that we work with as well. And then on top of it all, and really wrapping everything up, really the green bar should be around everything, is we're a regulatory compliant platform. Some of the other components of our innovative tech. I talked about the liquidity and execution powered by our smart order router and 50 coins that we trade, and how we can do it over our smart order router, connecting to multiple exchanges, OTC desks, market makers, and the asset selection. But the custody and security, we take a unique approach to that by doing our custody over multiple custodians. That allows us to utilize their insurance policies when we secure assets to them. And some of our partners are the BitGos, the Fireblocks, Ledgers, and we have a slide on that, but you'll see some of our partners. So we don't believe in doing all the custody ourselves. We put a lot of the custody in our partners' hands, who are focused on that and ensuring customer assets and the safety of customer assets. It's a unique proposition. And then we're trusted and transparent, the fourth part of our stool on why we are such a solid investment, and people should really take a look at investing in what is now close to a $1.5 billion market cap company. Trusted and transparent. We are a public company. You can't find anyone else like us in the agency space that's willing to put their financial statements out on a quarterly basis, get an annual audit, and really show consumers that their assets do exist. It's an independent brokerage model, and we're working towards our SOC 1 and SOC 2 certifications. But really, at the end of the day, what brings and really gives people that trust that they need in a crypto broker is the experienced team that we've put together. And now, myself and my co-founders, I've been a veteran, a capital markets veteran for 26 years. I started my career in an institutional brokerage that we sold to E-Trade in 1999. And I spent 7 years building E-Trade. And I've seen how that got built from 1999 to 2006 as the number 2 person in all of brokerage. And so I've been a veteran of this. I've seen the ups and downs of markets. I've seen how technology comes together in fintech. I have seen how you can actually grow a business to a multi-billion-dollar financial services company. 2 of my co-founders, Philip Aiton, Gaspar Dedruzzi, serial entrepreneurs, have built tremendous companies like Pager, telemedicine, that was before COVID. And now they've seen such an uptick in that business. Socure, which is one of the leaders in KYC for fintechs. These guys have built those companies. And then most notably, Oscar Salazar. Oscar was the founding CTO of some small company named Uber. He took the very first Uber app to the public market and scaled it. When he was scaling it, it had a little bit of issues along the way. Oscar is a veteran at learning how and knowing how to scale technology in the fintech and the technology space. It doesn't stop there, though. The rest of our executive team, veterans of E-Trade, veterans of CoinSquare, People, Alex Brown, PwC, we've brought in top of the line people who've worked in capital markets for many years to really lead our team. Some of the catalysts to growth is my last slide until we go to questions. Look, from day one, we've been focused on execution. That's what's made us successful. We don't try to bite off more than we can chew. We're always focused on what we can deliver to the consumers because consumers matter. It's the only thing that matters. We have to deliver product to consumers to make sure that they have what we call the Voyager experience. Product expansion, as I mentioned, international expansion, the mass consumer acceptance, which we're seeing now. And I think the other day we just mentioned as well, we had 250,000 downloads of our app in a 3-day period. We grew to the number 18th largest, most downloaded app in the Apple Store over that period. We also believe regulation, when more regulation comes, and I think there'll be thoughtful regulation in the US, it'll create more consumer confidence. And we clearly are waiting for some of the other companies to do their IPOs, i.e. Coinbase, and see the value that they get. We're hearing 50 to 70 times revenue. So that'll also add to the value prop for Voyager as a comp, but it'll also lead to some more customer acceptance. That's what I have today. I see there's some questions here.
Yeah, so I can moderate the questions for
Awesome.
you. So firstly, if we can just start with, what happened last week. So obviously we saw a surge in new accounts being added. The system went down. We fully expect that there's going to be another leg up for you guys in short order. So are you guys prepared to deal with the increased volumes, and can you scale up quickly? Is that all behind us now?
Look, I think I've spoken to a lot of people in this industry who've been through the fintech scale ups. What we saw last week, 100,000 new accounts coming through, basic users on our platform in literally hours. Nobody's ever seen that. It was the fastest anyone had seen that many. 100 new accounts per minute were coming. So, in any situation, you have to work on scaling the systems. The system is a lot more complex. I think a lot of people think it's like you just throw more databases at it. It doesn't work that way. I showed you the components. There's OMS components, there's pricing components, there's account opening components. So we've worked on scaling it. We're taking new customers on a really judicious manner right now. Oscar is working with us even more so than he had in scaling up the business. And we expect to handle all the volume as we scale our infrastructure up to be able to handle 10 million concurrent users at a time.
And then just to clarify for everyone watching, there were no security issues at that time at all. It was purely just technical and scaling up.
Yeah, thank you, Victoria, for that. I mean, we tweeted about that, and I've said that we had zero security issues. It was nothing related to security. No assets were ever compromised, or even, nothing of that nature. No PII, nothing. It was all about scalability. We got hit with what happens probably once in a lifetime.
And then also, so just with adding so many new accounts so quickly and all of the trading volumes that you have seen, it just seems like everything's happening so rapidly. So when will you guys be in a position to disclose new AUM numbers and new revenue projections to the market?
Look, I think to close the loop on how fast we scaled, someone said to me on a YouTube podcast yesterday, you basically did 2 to 3 months of growth in 2 to 3 days. That's how fast it was. Look, I think we are looking at it. I sit with my board and my management team when we're going to disclose new numbers. Not sure yet, but be prepared. We're trying to think through when we want to bring that to market.
And then any color you could give us on timing on some of the growth initiatives you have on your plate. So introducing a debit card, looking into new geographies, just what's kind of ahead of you on the catalyst front?
Look, I think first and foremost is working on getting that scalability to 10 million users, right? Because when you go international or add more products, it's going to bring more customers. So I haven't put a set time frame yet on that. We're hopeful. Canada, we've been working with the OSC, so we've always been trying to think through that. It's the first half of 2021. We're always hoping for March, but I think it's taking longer. We will not work in a jurisdiction unless we have the regulatory approval. So we need the OSC approval and the exemptive relief to get through that. So once that happens, we'll be ready to go in Canada. On the Europe and French front, we're working with the regulators there, and we're hopeful the second half, as we always thought, of 2021.
And then we're getting a bunch of questions just regarding your loyalty program. It sounds like you guys are going to be introducing a new loyalty program in short order. Can you give us any sneak peek details on that?
Everybody wants the sneak peek. The answer is I can't give any sneak peeks. I think people will be really happy with the program. There's obviously interest components, but the one thing I will say is what I've been consistent in saying. We came out with the program 6 or 8 weeks ago. Consumers didn't particularly like it, and it comes back to being a customer-centric business. We heard them loud and clear. We went back to the drawing board, and now all the levels within the loyalty program are all based upon the number of Voyager tokens you hold. And so we made those changes. We're just working on all the deliverables that have to go with that, the content. There's a whole bunch of things. I think everyone thinks you could just throw crayons on a paper and bring it to the market, but there's a lot of stuff we need to bring together. We're not that far away. We're close.
Okay, and then just lastly, I know sometimes there is confusion around your business model and you guys get looped in with an exchange, whereas you're not an exchange. So just to clear up any confusion for anyone who's listening, should we think about you guys more as, the Goldman Sachs, and then you would go and deal with, the New York Stock Exchange, the NASDAQ, the TSX, or what's the best way to frame you guys?
That's a perfect way, to say that we are the Goldman Sachs although Goldman's not huge retail, we're the retail Goldman Sachs for cryptocurrency. So we will connect to all the exchanges. I have a belief that at some point there will be some sort of national best bidder offer as it relates to crypto in the US market. So we will be connected to all the exchanges on that front.
Okay, well, I want to thank you so much for joining us. Unfortunately, we are out of time. There are quite a few questions that I wasn't able to answer. So if you didn't get your question answered, if you want to email it to me or to Adelaide Capital, we'll talk with Steve and his team, and hopefully we'll get the answers for you. Steve, thanks again, and congratulations on all the success that you've had.
Thank you for having me, Victoria. Appreciate it.
Thank you. Okay, so the next company and the next presenter that we're going to hear from is Jamie Leverton. So she is the CEO of Hut 8. She stepped into the CEO role in November of last year, and since then has raised the company $77.5 million, has cleaned up the balance sheet, opened up a yield account with Genesis, improving the corporate cash flows. So I'm going to pass it over to Jamie, but we're excited to hear, what she has coming next. So Jamie, you'll be able to just screen share at the bottom of your screen.
All right. Can you hear me okay?
Yeah, we can hear you and see you.
Wonderful. Thank you so much for having me first and foremost. It's great to be here. So I am officially 2 months into the role as the CEO of Hut 8. For those of you not familiar with Hut 8, we are one of North America's largest publicly traded Bitcoin miners, as well as hodlers. So hodl means hold on for dear life, and it's a crypto-specific term for those of us that are committed to Bitcoin and the long-term potential that we see for Bitcoin. And so we hold Bitcoin on our balance sheet and have done since inception. We were first publicly listed in Q1 of 2018. So hodling is part of our long-term DNA. So just a few kind of highlights, and I'll go into more detail as I get into the deck of how Hut 8 stands out in the space. Because we've been around as long as we have a very unique strategy. We have 3 generations of equipment actively in the field, actively in the money, and we manage our equipment in a really unique way in the space, again, which I'll go to in more detail. We have a very low cost of electricity, high power output, and the highest hash rate performing in the space today. We have a large amount of Bitcoin on our balance sheet. As I said, we're hodlers at heart. At the end of September, which is the last time we released our financials, we announced that we held 2,851 Bitcoin on our balance sheet. And obviously our balance sheet appreciates as the value of Bitcoin appreciates. And certainly it's been a great run over the last few months. we've done a lot to strengthen our balance sheet. And again, I'll go into more detail of that. This is just a highlight of our capital markets profile. So we're listed on the Toronto Stock Exchange. We also trade over the counter in the US. This includes the shares outstanding updated to accommodate for the large capital raise that we were really proud to do a few weeks ago of 77.5 million. This does show debt, which we announced 2 weeks ago as part of our use of proceeds. We will pay off that debt in full by the end of February. This is me. I really hate talking about myself, but at a very high level, I've been in technology space in Canada for 21 years. The last 10 plus, I've focused on transformation and high growth mandates. And the last 2 of those mandates were specifically within the data center space. So I have a lot of history and experience with data center operations. And really, Bitcoin mining is data center operations at its core. So all of our data centers, different from the mainstream data center space, do one thing and one thing only, and that is mine Bitcoin. But the actual infrastructure and how we operate those facilities is very similar to how data centers are operated in the cloud managed services and co-location space, which is where I came from. So I'm sure you are all aware of just how much we've seen an acceleration in Bitcoin adoption over the past few months. I think really Michael Saylor kind of kicked it off in August when he took such a significant position of Bitcoin on his balance sheet. And we've seen a lot of institutions follow along in that regard, which we think is only going to continue to accelerate. I think we're in the early days of that institutional adoption as the global pandemic continues to drive the printing of fiat currency by all global governments, and really the expectation that inflation is an inevitable result of all of the printing of fiat currency that's happening to fight this pandemic. And a natural hedge against that is Bitcoin. Bitcoin by its very nature, as I'm sure you all know, is deflationary. There will be a set number of Bitcoin ever produced, with the final coin entering the market in the year 2140. This is our current asset base. All of our operations are in Canada, and what's really unique about us is the proximity. So we have 104 megawatts actively in production today, within a 2-hour drive of one another. So we have our larger site is in Medicine Hat, where we have 55 megawatts self-mining, 7 megawatts used for a strategic hosting client. And then in Drumheller, 42 megawatts with 330 petahash being used for self-mining. And the nice thing about having our entire production so close together is we're able to share site operation staff between the 2 sites. We do run 24/7. Bitcoin mining never stops. And we have on-site technical repair shop, which is able to repair and maintain our equipment right there on site to make sure we have the highest uptime possible for the equipment in the field. The jurisdiction of Alberta is incredibly friendly to Bitcoin mining. Obviously, they've struggled with the oil and gas patch, and Bitcoin mining is a new industry which they are very supportive of. The climate for Bitcoin mining is exceptional. It's a dry climate, very long, cold winters. Our machines are absolutely loving the winter time right now because it allows them to perform at their absolute maximum capacity. We take advantage of free cooling from the environment. And as you can see from our the photographs here, we have a container-based system which allows for maximum natural airflow to cool those servers. This just shows the Bitcoin balance that we had. This is as of the end of September versus the others in our space. We compare ourselves to other publicly traded Bitcoin miners here in North America, and really just showing that our balance is the most significant of people that also hodl in this space. And this is just highlighting how much active hash rate we had in production as of the end of September versus the peer group. And really what's so important about this is it's the active mining that's in place today that's taking advantage of the biggest benefit to the mining economics. As Bitcoin has run up in price, the margins of mining Bitcoin are incredibly favorable. And all of this active hash rate is what's participating in these economics right now, of which we have one of the largest amounts. This just shows the Bitcoin that we've mined since 2018. So consistently one of the largest producers of Bitcoin in our space. And this just highlights the Bitcoin we hold on our balance sheet versus where our market cap was compared to many of our peers as of the end of December. And really we see significant room for appreciation in our valuation as a result of us doing a much more active job of getting our story out and having it told into new markets, such as this one today. So our equipment fleet philosophy is very unique. As I say, we've been around a long time, so it allows us to have 3 generations of equipment functioning in the field at any given time. The oldest group of equipment, obviously fully depreciated, therefore very profitable. We use a very conservative depreciation schedule of 2 years. The middle kind of vintage of our equipment is almost fully depreciated. It came on site about 18 months ago. And then our newest equipment coming in, bringing the top of the line specs and output. We've been bringing on the last 6 months. We've invested in brand new equipment from MicroBT, and we announced a couple of weeks ago another order of MicroBT equipment that will come on site over the next 6 months. So constantly refreshing the hardware in the field without taking risk on our balance sheet of having a giant capital balloon that you're chasing. We're just constantly in a refresh mode, which allows for always a portion of the fleet to be the latest generation equipment and always a portion of the fleet to be fully depreciated, and therefore it allows our balance sheet to be de-risked and very well managed. This just highlights the announcement we made a couple of weeks ago, the order that we announced in partnership with Foundry. Foundry had been able to secure brand new equipment coming from MicroBT, which we were able to secure for delivery over the next 6 months. And really critically important, those delivery timelines. The more hash rate you have earlier in this cycle, the better, because again, it's taking advantage of the greatest mining economics. We were really pleased to be able to announce the acquisition of that new equipment, which comes with an additional 475 petahash of compute power in that equipment order. This just gives you an aerial view of our site in Medicine Hat, which we're so proud of. So our power source is a mix of natural gas and wind. You can see some wind turbines in the background there with this aerial view. The Medicine Hat contract we entered into about 10 years ago, or it's a 10-year deal. We entered into it 2 years ago, so we still have 8 years left on this really aggressive power arrangement that we're so thrilled to have, and a partnership with the City of Medicine Hat that is really second to none. This just talks about some of the work we did on our balance sheet last year. So renegotiating key terms to drive an interest expense saving of $500,000 a year, which is now, as I told you already, we'll pay that loan off in full, as announced a couple of weeks ago. We added hosting revenue. That is a new source of revenue for us in the second half of last year. What is really compelling about having hosting revenue as a new revenue source is that's revenue that we collect in fiat. It allows us to pay some of our fiat-based operating expenses, power being our largest operating expense, and therefore we can keep more Bitcoin on the balance sheet because we have this incremental fiat source of revenue. We also insource the site operations, which drives a $1.5 million savings. They were previously outsourced to a strategic partner. And we are very proud that we were able to maintain our Bitcoin balance. And one of the ways we did that through crypto winter leading up to the halving was because we had such a strong Bitcoin position on our balance sheet that we were able to secure a loan using Bitcoin as collateral and therefore not have to sell our Bitcoin, which has obviously proven incredibly valuable in this last bull run. And this just shows that our Hut 8 stock really tracks to the movement of Bitcoin. So as a proxy to Bitcoin, it's a really nice, easy way to invest. Obviously, we trade as a traditional equity. Therefore, we can go into any traditional investment portfolio, but it does give that Bitcoin exposure. Again, in two ways for us, because we have so much Bitcoin on our balance sheet and we're creating new Bitcoin every single day. One of the other things that we announced a few weeks ago was the creation of a yield account. Genesis is a strategic partner of ours, and we announced that we had opened a yield account with Genesis, which gives us another source of fiat-based revenue. So we earn 4% on the Bitcoin we invest in this yield account. It pays us in fiat, and therefore, again, another offset to pay our fiat-based operating expenses that allows for more Bitcoin to be kept on the balance sheet. We are looking at a variety of different opportunities for growth over the next medium and long term, looking at opportunities for potential expansion of hosting partnerships, always open to looking at site expansions, potentially new sites, looking at other opportunities for potentially adding adjacent sources of alternate fiat-based revenue, as we've talked about the two new ones that we've added in the last 6 months. And really our intention is to be the blue chip gold standard for institutional investing in a Bitcoin proxy with the strongest downside protection of anybody in this space. So I have talked about the repayment of the loan, and really by releasing that the amount of Bitcoin that was being used as collateral for that loan, it allows us to put more Bitcoin to work in the yield account. So not only do we save on the interest, but we can increase the revenue that we receive from that Bitcoin through the yield account. This is our board of directors. So I started December 1st. Our AGM was December 30th. And I joined the board at that time. We also welcomed Sanjeev Samant and Chris Eldridge to the board at that time. Bill Tai continues on as our chairman for another year, which we're so thrilled about. Bill's quite a well-known venture capitalist out of California. And then we were also thrilled that Joe Flynn and Jeremy Sewell also stayed on for a new term. So really thrilled with an absolute powerhouse board of directors. And then I won't go into the appendix. This is really here, and this deck that I'm reviewing with you is available on the website. So you can feel free to go and download. And the appendix has a lot more of a kind of an educational perspective on how Bitcoin transactions work, the mining industry, how miners make money and the things that we control, the things that we don't, and then a glossary of terms that may be new for people in this space. And then at the end, a snapshot of our Q3 financials. Full financials are available on our website, and our expectation around the announcement of our Q4 and audited year-end financials will be sometime in the mid to late March timeframe. And with that, I will open it up for questions and stop my share.
Okay, thank you. So you've definitely been busy.
I don't sleep anymore. I just have naps.
So a few questions that came in. So firstly, can you talk a little bit about your revenue model? So when you're recognizing your revenue, do you recognize it on the gain of sale, or do you mark to market at the end of the quarter?
I believe the answer is mark to market at the end of the quarter.
And then can you talk a little bit too? So you guys are one of the largest corporate holders of Bitcoin on your balance sheet, being such a substantial holder and that being such an instrumental part of your business model. How do you guys, I guess, deal with the volatility and forecast that, like when running your business?
The volatility is very difficult to forecast. Of course, we can't forecast where Bitcoin's going to go from a pricing perspective. We do have opportunities in the field to make adjustments based on how the mining economics are going. So all of the equipment in the field can be has different modes, kind of a high performance mode, a power save mode. So we can make dynamic adjustments to the fleet. And I think as I talked about, we have added 2 incremental sources of fiat-based revenue that dampen some of that volatility risk. And I think that's important and a way that we're differentiated in the space.
Yeah, no, definitely. So on slide 13, there's such a disconnect between your market cap and Bitcoin holdings, unlike your peers. Can you maybe just talk about this a little bit more and explain what you think is happening?
Yeah, absolutely. Great question. Historically, Hut 8 did not have a focus on investor relations, marketing, and we really weren't investing in getting the narrative out. So the people that knew us, knew the story, held our stock, but we weren't actively marketing and kind of getting the narrative out there to create more demand and more interest. And so we've absolutely made a focus on doing so. We didn't historically have a head of investor relations, for example. And so I joined on the 1st, and Sue joined as our head of investor relations on December 18th. This is a brand new investor deck, so the first piece of kind of marketing content that we've refreshed, but we are actively looking at broad reimagining of all of our go-to-market, and certainly making an investment in that space. Another driver of the disconnect of some of the valuations, as I'm sure you will understand, we trade on the Toronto Stock Exchange and over the counter, but companies like Riot and Marathon have the liquidity that the NASDAQ offers, which is certainly of benefit to them.
And so that actually rolls into one of our next questions, asking if you guys are working on a NASDAQ listing, or if that's something that you guys would think about.
So certainly we will think of and explore all options to increase liquidity, but any specific strategies around that I can't speak to.
Yeah. A few questions here asking about, your average all-in cost to mine a coin, and then also just talking about how you think about mining difficulty as hash rates continue to go up and a lot of miners are buying and installing new equipment.
Yeah, so that's it's such a great question, and it's why I spend so much time talking about how much hash rate we have actively in production right now, because so much of the margin opportunity in the mining space is being in the full cycle with really active participation. So we get the benefit of being so active with one of the highest installed hash rates during this kind of early phase of the market. And as the difficulty comes on, it's the margins that get compressed, but they're still very, very healthy. And what you need to make sure that there's always a strategy for and cognizance of is making sure that you have secure low-cost power, that your facility's up and running, that you're keeping the miners online as much as possible. So everything we do to be best-in-class operators in the space and ensure we have best-in-class contracts, a climate that allows for low-cost cooling, all of the things I talked about is how we are able to participate regardless of the difficulty in profit in the space.
And I know you talked about your replacement cycle in the presentation, but we have a question. How often do you replace your servers?
Yeah, so that's part of our fleet management strategy. So we do, it's not a fixed schedule, but it's a regular rate of refresh. So we did a refresh the last 6 months. We've already announced one that we're in the middle of now. So it's something that's basically always happening. We're always looking at refresh, but it's not to a set timeline. And part of the reason that there is some fluidity in that time frame is because the hardware is changing. So the last cycle, we had really regular step change refreshes of new equipment coming online. And we think that that rate is going to slow down a bit. So we use a 2-year depreciation cycle, as I talked about, but we actually think the productive life of the equipment coming online now, the M30s, the M30Ss, we think their productive life could be 3 to 4 years. So we really look at how the machines are performing relative to what else is happening in the marketplace, and make that determination on when we need to start planning a refresh cycle based on what the other chip performance is looking like versus what we have in the field.
Okay, and then a few questions regarding just how you guys are getting your power. So you talked about your 10-year agreement. Do you guys have any visibility that when that rolls off, you'll be able to, refresh and keep those same low power prices kind of going forward into perpetuity?
We feel very confident based on the strategic relationship we have with our counterparties that longevity is secure.
And then how much of your energy source comes from renewable sources?
So we're a mix of natural gas and wind. Wind is about 10%. And that varies as Alberta continues to invest in more renewables, then the mix for us will come up as well.
And then just asking, is there the potential for partnerships with Canadian oil and gas companies, given your expertise and location in Alberta?
I am open to potential strategic partnerships with all parties, including oil and gas in Alberta. Absolutely.
And then can we also just talk a little bit about Bitcoin halving?
Sure.
And how that affects your business and how you guys plan for those events?
Yeah, so the halving is fascinating. And we actually don't know if the future cycles will repeat the past cycles around halving, but the prior cycles would have kind of a negative cycle preceding the halving. Then the halving occurs, it drops the reward down by 50%. But then generally what happens next is a bull run. So it's kind of a supply and demand conversation, but the halving leads to a very dramatic decrease in supply, which in a few months, then it all catches up and the bull run starts. So the few months after, immediately post halving, are incredibly difficult from a mining economics perspective. But then the bull run starts, and that's the best period of mining economics. So it is a very delicate balance. And again, we don't know if the next cycle will be the same, because the rate of institutional adoption, the dampening of the volatility, the amount of people coming into this space with an intention to hold their Bitcoin indefinitely, we just don't know if that down cycle will return or if we're in a different type of cycle charting new territory this time. But certainly my responsibility is to give us all of the downside risk protection for any scenario that might unfold, so that we minimize those risks as much as possible.
And then I guess just lastly, before we wrap up, so what catalysts should we be watching for in the next few months from Hut 8? You've done so much already. What's coming up next?
That is a really tough question. So last week we had 4 press releases, and the week before I think we had 2. So I can't tell you what to expect, but I can tell you we're not slowing down.
Okay, that's great. So I appreciate you taking the time to come and chat with us today. Congratulations on everything that you've been managed to accomplish in such a short period of time. If anyone has any questions that didn't get answered, again, just email Adelaide Capital or myself, and we'll talk to Jamie and her team and try to get those answered for you.
Thank you so much. Thanks again for having me. I really appreciate the time.
Okay, thank you. Okay, great. We have Mark on. So our next speaker is Mark Binns. He's the CEO and co-founder of Big Digital Assets. Big is at the forefront of regulation in the crypto space, which is a trend that we only see gaining momentum. They're not only helping regulators to form the regulations, but also anticipate being one of the first fully regulated open loop exchanges in Canada. I will just tell you a really funny story before I pass it over to Mark. So another colleague of mine was very skeptical when we were hosting, a crypto day, and she sat on some of the company presentations with me just to learn about each of the different businesses. I think halfway through, talking to Mark and his presentation to us, she was texting me on the side, buying stock, fully converted. And so you're preaching to the converted, Mark, but
I love it.
We can see your screen. Over to you.
Okay, perfect. Well, thanks very much for having me today and letting me introduce the big digital assets story. What you're going to see here today is an exciting investment opportunity. We're a very fast growing company right now. You're going to see some great data about where we're going. We have really great revenues, growing revenues, cash flow positive, a lot of cash in crypto in the bank. And we have some really big catalysts coming up. That's what investors want to see. And I'm excited to tell you about the catalysts and what we have going as a business as we go here today. We're sitting around $100 million Canadian market cap. So we're just getting going. The last two presentations are in the range of, 750 to 1.5 billion in market cap. So we have a lot of leverage in the business right now and a great opportunity. So we're called Compliance First Crypto, and that's because we have two operating businesses, and they're both designed to make money around the world of compliance and regulatory opportunities that are presenting themselves in the crypto market. As you can see, the parent company is Big Digital Assets. Here's the tickers, but here's the two operating businesses that make it up. These are both 100% wholly owned subsidiaries, all of our own tech and all of our own IP. Nothing is outsourced, 100% ours. Blockchain Intelligence Group is a crypto forensics business. We have two different products that are helping track crypto as it moves through the blockchain, targeting market participants from law enforcement all the way through to crypto exchanges that need to basically run enforcement on their own exchanges. That's run by Lance Morgan. I'm going to walk you through that business start to end. And the other one is Netcoins. And Netcoins is very similar to Voyager that you just saw earlier. It's our crypto exchange business. We're primarily focused on the Canadian market and have some big exciting catalysts coming up and a great growth story that I'll show you on that business as well. And it's run by Mitch Demeter. And speaking of people, everyone wants to know they're investing in a good team, right? So you can have some technology, but you need people that can execute and grow the business. So I'm going to spend a little bit of time on the team here. Not much on myself. My background is all sales and marketing. I actually started in technology, computer science undergrad degree, wrote code for a living. Back at the .com days, started out a Canadian company named Nortel that people would remember well. And then I went business side, got my MBA at Western, and really started helping technology companies grow their businesses. My specialty is in sales and marketing and revenue growth. Won some awards, and I'll show you what we're doing here at Big, leveraging my experience. Lance Morgan is the co-founder of Blockchain Intelligence Group, one of the two operating businesses, operates as the president of our business as well, and a director, sort of a serial entrepreneur with very successful exits in the past. Kim Evans is our very capable CFO. She's got a lot of cross-border experience. The beauty is we're QB listed in the States, so we get a ton of trading volume in the States. And we're getting a lot of exposure in the States that we're ramping up now. So it's great to have someone who understands how to execute on a business that has investors that grow both sides of the border in Canada and the US. And the last two guys here, I'm going to spend just a little bit more time. Robert Whitaker comes from Homeland Security. He actually worked in Washington as the supervisory special agent, leading the teams for the US government that did investigations on crypto crime. This is really critical because now he is the chief operating officer and is running Blockchain Intelligence Group with Lance. And those products are specifically built for law enforcement to track the movement of crypto. So he knows what products need to be built because he used to buy them. And he has the connections in Washington with buyers. We've had about $1.5 million worth of contracts with the US Secret Service and the US government in the last year alone. And that is expected to grow significantly as the general adoption of crypto grows. The US government is going to start taking a larger look at what the movement of these funds are in and out of the States. And then the other guy here is Mitch Demeter. And he actually, I call him crypto royalty. He opened literally the world's first Bitcoin ATM here in Vancouver in 2013. I remember when it was happening, I was in my office and there was a big hubbub about something happening in crypto in town, and that the national news was coming and all the newspapers were there. Anyway, little did I know at the time, it was Mitch opening this Bitcoin ATM, which he then scaled and put Bitcoin ATMs all over the world, mostly Southeast Asia. And he also started a very early stage trading platform, crypto trading exchange called Bitcoiniacs. He grew both those businesses, and he sold and he retired a young man, probably in his mid-20s. And I found him sitting on a beach late 2017. I think he was getting bored. And I said, there's a new bull run in crypto happening. I'd love you to come help me build our trading business. So Mitch joined me then. That's nearly 3 years ago now. In fact, it is 3 years ago now. And he's the president running and scaling that business. And you're going to see some of the success we're having as we go here on, I tell you the story about Netcoins. So I like to say that Mitch has forgotten more about crypto than I'll ever know. So we got the right guys leading the business. Now, Blockchain Intelligence Group. So this is the first of our two businesses. It's really unique. You haven't seen anything like it here today. In fact, there's only a couple of companies in the world that can do what we do with Blockchain Intelligence Group. Our statement is really to bring security and accountability to crypto around the world. We do that through two products, Clue and BitRank. And I'll give you a little color on both of them. Clue is the one that's getting tremendous traction right now. So Clue is used by law enforcement, everyone from local police departments all the way up to the United States government, literally the US Secret Service being our biggest client, to track the movement of crypto. Here's a graph of the product. You're not supposed to be able to read this, so don't worry about trying to squint and see what's written here. Just understand that visually, the tool, which is a software as a service product that you sign up for and you get a license, you can put in a wallet address of wherever you want to start tracking crypto, and you can watch it move through the blockchain. You can see it move in real time. You can put watches on addresses, such as if Bitcoin was stolen and it got moved to a wallet and it just sat there, you can put an address watch on it, and if it moves again, you'll be notified. And all coins usually, with time, end up at an endpoint, which is usually an exchange. Because if you have crypto, the only way to get it into fiat currency is go through an exchange. So an example use case is that someone stole your Bitcoin, you report it to the authorities or the police, and they'll say, okay, what wallet was it stolen from? They'll plug it into Clue, and Clue will track it. And if it shows up at, just for example, Coinbase in San Francisco, because the criminal's trying to cash out, then what usually happens is law enforcement will send a subpoena to Coinbase in this example saying, freeze the coins in that wallet and tell us who owns the wallet. And exchanges know who owns the wallets on their platform. They have KYC. All these wallets in between may be anonymous, but at the end point, it's always known. So then the police department can issue a warrant for the arrest of the person that owns that wallet and has those proceeds of crime. It's not our job to be police officers. It's our job to provide the best tools possible to law enforcement the world over to fight crime that is involving crypto. And that could be anywhere from basically purchases of illegal drugs, child pornography, weapons, again, crypto theft, as I mentioned. There's a lot of different crimes that can involve crypto, of course, pretty much anything that could involve fiat. And we're trying to give them tools to combat it. Fiat tools have been around for hundreds of years for law enforcement, but only in the last couple of years has anyone developed proper tools for law enforcement, and that's what we have with Clue. BitRank is very similar. It looks at wallets that are involved in transactions and gives them scores. And we collect data globally on wallets that are involved in illegal activities. We even have a website where you can report wallets that are involved in illegal activities if you're a market participant, like an exchange or an individual. And that's some of the attributions that you see on these wallets here, is that we can also tell people in Clue what we know about them and whether they've been involved in illegal activity. The value of this product is you can put it inside of an exchange globally, and compliance officers can look at trades going through their platform and make a decision if they want to not deal with a particular customer because they keep depositing Bitcoin that's coming from high risk wallets. Again, we provide data and information for people to do their job. We also provide a crypto training course. We don't talk about it a lot, but it's like getting a CA in accounting. It's getting a certified cryptocurrency investigator course in crypto and essentially in crime or crypto investigations. We make $1,000 from it. And here's a few names of companies that have done it. It's a lot of financial institutions, banks, crypto exchanges, even universities offer it to students now. It's really paid marketing for us. When someone from a bank takes the course and then they want to actually be able to do their job because they're in compliance, looking at crypto transactions going through bank accounts, they need a tool. And that's when they call us up and they buy Clue. So it's a great lead-in product and growing quickly. And lastly, sort of on this company, it's a really tight competitive space. There's only really 4 companies in the world that do what Clue can do, particularly from a law enforcement point of view. And the other 3, Chainalysis, Elliptic, and CipherTrace, are all private. You can't invest in them, whereas you can invest in Big Digital Assets, which is the owner of Clue. Chainalysis just raised $100 million at a $1 billion valuation. The other companies have done very significant raises. And if you take Clue and look at the technology we have, which is every bit as good as these other players, you would very quickly do the math and say, well, Clue itself, even from a technology point of view, is probably worth $100+ million, which is more than the market cap or around the market cap of all of Big Digital Assets, all on its own, just as one product. This market is growing really quickly, high barriers to entry. Clue took $15 to $20 million to develop, and it has 660 million data points in it just for the Bitcoin blockchain alone. And we support the 8 largest blockchains, being Litecoin, Ethereum, Ripple, etc. So there's a couple billion plus data points inside of this product. So, you know, a garage startup is not going to suddenly be building competing products. And the market's growing very quickly. So we're really excited about where Blockchain Intelligence Group is going. Now, the second company, Netcoins, is our Canadian trading platform. A certain amount of what I talk about will be similar if you listen to the Voyager presentation earlier. There's between 15 and 20 exchanges and trading platforms in the country, and all of them are operating right now in violation of securities law. Essentially, the regulators have been trying to figure out what to do with this new asset class and exchanges in this asset class. And we saw this coming. There's been some, you know, big failures and big frauds in the space. Everyone probably has heard of Quadriga back in the day, where the founder died or did not die in India, and $250 million were, you know, lost or disappeared. We said there's a huge opportunity in the marketplace to go out and be first and become regulated and put up our hand. So instead of just competing on product and just competing on marketing and just competing on price, which we do and do very effectively, and I'll show you some numbers, we also said, let's go and try to become, if not first, one of the first regulated legal trading platforms in the country. So we went to the CSA. We actually started in 2018, fall of 2018, the first conversation. And we said, we'd love to become regulated and put up our hand. We're already owned by a public company, and we're the only trading platform in the country that's owned by a public company. And we're already audited and transparent and secure. And they said, great, but we don't know a lot about crypto. So we started a process, and we started working with the CSA and the members, the OSC and the BC Securities Commission, which is our local regulator. We hired 2 law firms, Miller Thompson, a guy named Derek Fall, top crypto lawyer in the country, and then BLG, having the best securities lawyers in the country. And we spent probably 50 meetings over the course of 2 years with the CSA, explaining to them how we do customer onboarding, anti-money laundering, fair trade execution, custody, how we have insurance, everything about the platform to build a framework on what a regulated platform would look like. Fast forward 2 years, on September 29th, so about 4 months ago, we submitted a 488-page document to the BC Securities Commission and the CSA Sandbox, which is the whole country of regulators, with our application. The beauty is we helped build the framework and then applied to it. So we're very close to the finish line. We're hoping to get the license this month. We've been having tremendously good conversations with the regulators, going through the finer points of the application, and believe we're very close to going across the line. And that's going to be a big deal. It's going to change how crypto is trading in the country. It's also going to generate a massive amount of free publicity for Netcoins and free marketing. You know, we expect it to make national news when there's the first regulated, we call it open loop or full exchange platform in the country. And then there's going to be a big competitive reduction. So enforcement has been waiting for legalization essentially before they go around and do enforcement. Just like in the cannabis space, everyone was left alone until there was licenses. And once legalization happened, anyone that didn't have one had to get one very quickly with a small grace period or be shut down. That's coming. In fact, the OSC has already started pushing competitors out of the Canadian space because they know they won't get licensed, like BitMEX recently. And then what we're going to see is a significant increase in treasury buys, fund purchases through Netcoins, because again, it's going to be the first and only legally regulated exchange. And once that's available, that's where all the corporate business will go. They're not going to buy from not regulated market participants. We like to say it's funny to even consider that someone might buy Apple stock through a black market exchange as opposed to one of the regulated exchanges in a country. This is going to give us a very significant volume rise and a significant revenue rise. We believe it could be as much as 3 to 5x on the volume in the first quarter alone for the business. And the reason the revenue will rise with the volume is we have a very standard approximately 1% or just over 1% margin, which is our business model on all trades, which is helping our platform grow very quickly. And on that note, here's some of the growth numbers. They're quite staggering how far we have come and are coming. If you look at our trading volumes, this is January 2021, so the month that just finished 2 or 3 days ago, 142% month over month on trading volume and 148% month over month on revenues. If you put that into how much bigger it is, it's 2.5 times growth in a single month. Also, in the range of 2,700% year over year, 1,900% year over year. The more recent one on the month over month is nice to see that revenues are growing even faster than volumes. We're getting a slightly more margin out of our trades as we become more and more efficient with our liquidity providers. Active users grew 75% month over month. That's the same as a double. Assets under custody, full 50% growth in 1 month, 38%, 100% year over year. And then transactions, 119%, meaning we more than doubled the amount of transactions that we did in January versus December. And of course, December was up very significantly over November. And again, our trading margin on that is give or take 1% or usually slightly over. Now, wrap it up together. Here's where we're going. So we came back in the middle of 2019 where Clue, essentially BitRank were being finished, coming out of beta, starting to be sold. Netcoins platform came online, very basic revenues, 150,000, grew by the next summer to 500, 600,000 by the end of Q3. Q4 was the quarter we just finished. We're projecting around 950,000. We'll probably come in a bit ahead of it, give or take $1 million in revenue on the quarter. And then what we're showing here in Q1, which is as far out as we can look right now, is a projected revenue of 2.5 million. That's a combination of Clue and Netcoins, but with the Netcoins growth being so hyper quick, it's becoming a larger percentage Netcoins right now. If you look at 81 million and you do the math on 1%, you can see that we probably made at least 800,000 just on trades there in a month with Netcoins. It's hard to predict any further out, and we'll be discussing as a management team what guidance we want to give the market. But when you're growing it 2.5 times in a single month on a trading platform, and we've looked at February and it's already showing the same growth over January, it's hard to accurately predict the growth because it's going so quickly and everything is scaling so fast. Recent news, we also hold Bitcoin on the balance sheet. We have about 240 Bitcoin right now. We're going to continue to add Bitcoin. 2 reasons. Number one, we're huge believers in the future value of Bitcoin and where it's going. We started buying and have never sold around the 7,000 mark US, probably some even earlier than that. It's been a tremendous performer for us on the balance sheet. And as Netcoins operations scale so quickly, we need more balance, Bitcoin balance, so we can actually settle trades instantly with our customers before we get coins from our liquidity providers, which we typically settle with once a day. So it's just supporting our growth. We also just recently closed a $12 million bought deal at 50 cents Canadian. It was more than 3 times oversubscribed, but we wanted to minimize our dilution at this point because we're very firm believers in where we're going as a business and the value. Like I said, we're just starting the curve that you've seen on some of the other companies earlier, where we're sitting at 100 million. But we have more than 25 million in cash and crypto on the balance sheet now with our financing, cash flow positive, we expect a very significant increase in the business from here. You can look through the other news on the website. See how we're doing on time. Yeah, we're about 20 minutes. Cap table, 195 million shares outstanding, and of course, some options and warrants from financing and employees that we make sure are part of this business that are helping us grow. Management owns about 15% of the company. And what I like to tell you people is that we've never sold a share. If you actually go look on SETI, you can see that we're buyers. And we believe in the business and where we're going as a growth story. We have significant expansion plans ahead as well, which we'll talk about, but we're believers in this business and know that it's early days, and everyone's bought in and committed. And that is the end of the formal presentation, and I'll turn it back for questions, I guess.
Yeah.
There we go.
Thank you. Let me just get situated. So you talked about, the growth rate being difficult to predict. And obviously, the last few months alone, it's just been extraordinary, the rate that we've been seeing. So when you look at managing your business and you're trying to forecast out, what are you guys using as a growth rate? And when do you see this normalizing to more of a normal level? And what would a normalized growth rate for this business look like?
Yeah, it's a great question. I know that Michael Saylor right now is holding a session in the US with institutional buyers of crypto to explain his experience and what they've done at MicroStrategy. So I don't see the industry slowing down at all. In fact, I think it's going to continue to accelerate. We believe $100,000 US Bitcoin is going to be here within the next 12 months. And we also are ready to be surprised if it comes even sooner than that. So yeah, we're struggling to predict, like I said, when you have a 2.5 times growth in a single month, February is looking the same, to see where this business goes. I think a normal growth rate would be double digits on a monthly basis, given where the industry is. But we've been seeing triple digit growth on a monthly basis right now. So, we're, instead of trying to predict where it's going to go, we're aggressively scaling both our customer support teams to make sure that we have industry leading support for our customers, particularly on the Netcoin side, as the user growth is so feverish, I guess you would say. We're trying to make sure we can offer live support and both email and phone support, and then making sure we're upgrading our technology in the background to support the growth. So right now it's about execution, and I guess we'll let the market do what it's going to do.
And then even so, just moving on, so a little bit about M&A. As we move towards a more compliant and regulated ecosystem, there's so many different exchanges that you see popping up in Canada. I would presume there's going to be an added cost for everyone in terms of coming compliant. So do you expect to see M&A in the space? Should we think of Big as a future consolidator? How do you see that playing out?
I think there could be some M&A in the space. I don't see Big as being a consolidator in the short term. We've already been approached by smaller exchanges that said, we see regulation coming. We're probably not going to be able to make the jump in terms of all of the costs and reporting and legal requirements. But we know that we can pick up their customers on the open market, right? So as the exchanges shut down or fold and we move to a much more consolidated, we think there'll be 2, 3, 4 regulated exchanges in the country eventually. The other customers will disperse and we'll acquire them essentially through, marketing and our product. Now, what I can say on the other side is that there is lots of global players looking at the Canadian market, and assuming we get our license approval, we could become an acquisition target, or Netcoins could become an acquisition target. You take a HIT BTC or a Binance or a Bittrex, they might want to enter the Canadian market. They're going to need a license. The OSC has already told foreign competitors that they're not allowed to operate here in anticipation of the legalization, but they could buy a company like us to enter the market. So that's something that you never know. It's possible down the road.
And then I have a question that just came in asking, how many coins can you trade on your exchange? How do you see that expanding over time? What's the process in terms of adding new coins?
Yeah, we have 7 coins. So we basically trade the top coins by market cap and essentially by global adoption. And one of the big reasons is those top coins have proper institutional custody built around them. Our custody partners don't support hundreds of coins and smaller coins. They've spent all of their time and energy and infrastructure making sure they can support, Bitcoin, Litecoin, Ethereum, the top coins very well, getting proper insurance, making sure everybody understands them. And as we've been working with regulators over the last 2 years, we've seen there's not an interest in having a lot of small coins that have extreme volatility and not wide adoption traded on regulated platforms. So we have really been focusing on bringing the highest volume, the most major coins to market. And I can tell you that it's still, generally most of the time, 90% plus Bitcoin that's traded anyway. It still is by far and away the volume leader. Part of that is people are often buying Bitcoin so they can trade with altcoin pairs on, international platforms. But for now, we're sticking with the majors. The approval process would be basically a study with our compliance officer and our custody partners on what we can hold on to safely and what regulators are open to. So it's now a three-way conversation with us, our partners, and the regulators if we ever add coins.
I have another question, and I'm sorry to jump around to some of these questions
All
are very
good.
specific. Just asking about your current listing. So you're listed on the CSE. Do you have any plans to list in the US or on any of the US exchanges?
Yeah, we are listed in the US. In fact, we're OTC QB listed in the US, which is a good quality listing. We trade often a couple million shares a day in the US. We have a lot of great investors, and we are continuing to work on exposure with US institutional investors right now as well. So Canada, the QB in the US, and we do also have a German listing in Frankfurt.
And then what catalyst should we be looking for big, just upcoming in terms of, increasing different geographies where you guys are able to attract customers for your exchange? And then I guess we talked a little bit about the coins as well. So it sounds like there's not really too many plans there to add new coins currently.
Yeah, so we have great catalysts. So the regulatory license in Canada is a big one for Netcoins that we're working on very diligently. Announcements around revenue growth and customer acquisition for the Netcoins platform. As you've seen some of the news recently, very significant. We'll continue to put out that news as it happens. Geographical expansion. So we're doing a study right now with Netcoins on Europe and which countries to launch in next, and where we think showing up with a regulated platform in Canada where we can quickly adapt it as a regulated platform in those countries will give us a big market share. And we're also looking at the US. Right now, we're so busy growing in Canada that finding time to launch the other countries is the challenge, but it's definitely coming. It's something we're looking at over the next 1 and 2 quarters. On the blockchain intelligence group, we're going to continue to announce contracts. We continue to attract large global government customers, and we'll be letting the market know as we continue to acquire those customers. And then really exposure. We're working on a big exposure plan. Recently launched TV ads for both Netcoins and also for big digital assets. And we have an OTC markets conference tomorrow out in New York that brings 150 plus institutional investors in the US. So I mentioned that we are US listed. So there's some great exposure catalysts coming up for the stock as well.
And then just in terms of updating your numbers, just I kind of had asked Voyager the same question, but just things are happening so quickly in your industry. So I saw that you guys did just put out your updated Q1 revenue number, 2.5 million for the quarter.
Yeah.
Will you be updating this intermittently if things just continue to take off, or is this a once a quarter kind of publication that you're going to put out to the market? Or
yeah, I think we have to see how fast the market keeps growing. Normally it'd be more like quarterly financials, but with being a public company and audit, the end of year audit financials are 5 months before they come out, and regular quarter is 2 months. And that's an eternity right now at the speed everything's moving. So we'll be looking at the numbers as they come in and making a judgment on whether we think it is, important and material for our investors to see the updated numbers. And as that happens, we'll release them.
And then, sorry, I'm going to bounce back just really quickly before we go. One last question on your US listing. Any plans to move up exchanges and potentially to the NASDAQ?
Definitely. So as our growth supports it, we know that uplistings, the next one above us is the QX, and then above that is the NASDAQ. We have an amazingly good relationship with the OTC group in the US. Talk to them regularly. We're going to be doing a crypto conference with them coming in April, I believe. But we are looking at the listings, and as it makes sense to move up to get more eyeballs in the story and liquidity, we will. We don't want to move too fast because there becomes more stringent reporting requirements, more costs, et cetera. So we're looking at it closely, and we will continue to move up in exchanges as the business warrants it.
Okay, well, we're going to end it there. We're out of time. I want to thank you so much for coming on. Like I said at the beginning, regulation is becoming an ever increasing force in crypto, and you guys really are at the forefront of this. And so we're really excited to see what happens and how things evolve. And we'll be watching your news coming over the next few months.
Excellent. Thanks for having me, Victoria.
Thanks so much. Okay. So our last presenter, okay, Fred is on. So far, we've shown you 3 companies that, are all listed in Canada that we really like. And so we've asked Fred to be on to give you a little bit of a different flavor of how you can gain exposure to Bitcoin or other cryptocurrencies. And so Fred Pai, he's our last speaker. He's the CEO of 3iQ. 3iQ has more than 900 million in assets under management, and they offer investors a convenient and familiar product to gain exposure to crypto assets rather than right out holding the currencies. The QBTC was Canada's first publicly traded Bitcoin product. So congratulations on that. And Fred, I'm going to pass it over to you. You can screen share if you have a deck at the bottom of your screen.
I do, and I have a bit of a presentation, but I wanted to, first of all, congratulate you. You've had a great group of presenters today. It's been absolutely wonderful. And a lot of us in the infrastructure and blockchain in Canada appreciate the exposure that we've been able to get. So for those of you who don't know me, I'm the founder and CEO and chairman of 3iQ Corp. And you're going to hear a little bit today about what the challenge was that we took on for the rest of Canada to be able to launch the very first Bitcoin product. So to start off, a lot of people say, well, why did you do this? And I say, well, it's because I've been there before. Back in 1983, I was working with a company called Guardian Trust Company. And Howard Kelly, the president, had come up and said, you know what? We need to list our gold, silver, and platinum certificates on the Montreal Stock Exchange because there's no way investment advisors have access to investing in gold, silver, and platinum. So we approached the Montreal Stock Exchange and the Quebec Securities Commission. We said, we'd like to list these. And they say, hang on a second, it's non-traditional custodians, it's volatile, it's speculative, and gold is used for criminal purposes. Why would we ever accept that? Well, following 3 hard years of work, we finally got accepted, and Guardian Trust was the first to list gold, silver, and platinum certificates on the Toronto Stock Exchange. So on the Montreal Stock Exchange back then. So a lot of people say, well, wow, 3iQ has been such a great success, an overnight success. And just to correct you, Victoria, we've actually just crossed over 1.4 billion today from 900 million when we sent you this in December, I think. But the road was not an easy road. We started in the fall of 2015. We wanted to, we was running a multi-asset momentum portfolio for Landry Investment Management. We wanted to include Bitcoin in our portfolio, but there was no way to buy it. So we decided we would talk to the Toronto Stock Exchange, and we met with John Mountain in 2016 and said, hey, John, how would you like to be first? He says, we'd love to be first. Let's make this happen. We filed our first prospectuses, and then they created the launch pad, which slowed things down a little bit, but continued on after the peak. And we launched the first global crypto asset fund in March of 2018. So in March this year, it'll have the first 3-year track record for a digital asset fund in Canada. And I think we looked at the last 12 months, it was up 361%. So it's going to have a good 3-year number. We continued and filed again, and we were about to get listed in June of 2018. However, John Mountain got an aggressive pancreatic cancer and he passed away, which was very tragic for him and his family, but also for us. The new group came in, they said, you know what, we don't get this Bitcoin thing, and they wanted us to start over again. But in Canada, if the regulators reject your portfolio or your fund, in this case, you're allowed to challenge them. And they responded to us with the 5 or 6 reasons why they wouldn't accept us. We took them to a public hearing, which is basically going to court for 3 or 4 days in the summer. And by October 2019, we won the right to launch a Bitcoin fund. Having said that, we filed a syndicated fund in 2019, and it wasn't until April 2020 when we were able to launch the first fund right at the peak of the pandemic. We said, what could possibly go wrong now? And the fund only launched, but it launched with a $15 million, first market cap was 15 million. Having said that, 2020 was a record year. 3iQ's Bitcoin fund is the single largest growing fund from zero in 9 months that Canada's ever seen, going to 1.4 billion. So the challenge for the Ontario Securities Commission, they said, look, we've got a couple of challenges. Is number one, we don't understand the custody, we don't understand the auditability, we're concerned about pricing, we're concerned about market manipulation and what's not in the market interest. So we spent a year and $4.5 million, a couple of years and $4.5 million more to produce 10,000 pages of testimony and challenge the regulators. So when we won, the judge's first statement was, this is a landmark victory. He said the application that we were submitted challenged the fundamental concepts of securities legislation in Canada. And I think that was really key, because they basically said the application isn't about the merits of the Bitcoin fund. It has to do with the role of regulators to approve or disapprove the merit of the fund and not the securities beneath it. And it's also outside the scope of authorities, regulators, to immunize investors from volatility or speculation or risk-taking. That's part of the capital markets credo. So the first thing they challenged us was custody, and we clearly won because Seidel Trust Company out of Canada and Gemini, the Winklevoss brothers company out of New York, were both qualified under 81102 as compliant custodians. Gemini had completed their SOC 2 Type 2 compliancy, and they are a trust company. We keep everything in cold storage, and we passed all the cybersecurity regulations. Next was the auditability. They challenged and say, we're not sure an auditor can audit a crypto asset fund or a digital asset fund as such. Well, Raymond Chabot Grant Thornton came out and said, well, we've already audited their other fund, 2 years in a row, and we beg to differ. We think actually auditing the blockchain is actually easier than any other kind of physical audit. Then they talked about pricing, and this was really quite true. It was very tough to find the real price of Bitcoin at any given point in time in the day where it trades. And you have to be able to create an index that is free from market manipulation. So we're very fortunate that one of our owners of 3iQ is a company called Van Eck out of the United States. You may have heard them. They've attempted to launch an ETF a number of times. But they also own the MBIS and Crypto Compare Index company out of Europe. And what we did is we worked with them and designed and built what we consider a bulletproof index, and probably the best pure index on Bitcoin. It's followed on Bloomberg under the symbol MBIBTC. The next was the concept of market manipulation. And although the judge said, well, there is evidence of market manipulation and associated risks in investing in Bitcoin, there's also sufficient evidence that there is a real market for Bitcoin with actually real trading. So we were able to make sure that we took certain markets out of our index. And Bitcoin was always subject to the standard Bart-Simpson chart pattern, or the inverse Bart-Simpson, where over a period of time, it would shoot straight up, have a horizontal move for a day or two, and then get back its full retracement. And the same as the opposite is true. but nobody could prove that that had to do with actual physical market manipulation. They weren't real bona fide orders. Having said that, the OSC, for those of you who haven't had the pleasure of dealing a lot with regulators, is they do have one big stick. They can always say it's not in the public interest for us to launch this fund. And basically, the judge said, while public interest jurisdiction under the Act is very broad, meaning there's a lot of ways to use it, it's not infinite. And we used testimony that said basically 5% of Canadians at the time were holding digital assets. And with the collapse of Quadriga CX and Einstein Exchange, we suggested that 110,000 Canadians lost 250 million. And we suggested it's about time for the Ontario Securities Commission to stand up and regulate. So a lot of this sounds kind of antagonistical. Yes, it was expensive. Yes, it did take a lot of time to do. But the reality is, working with them, we got it right. And we believe wholeheartedly Canada is leading in this role. We have by far the best exchange listed product anywhere in the world. And Canadians have been very fortunate to benefit from all the hard work that we put in. So it was a very big day when we celebrated the launch on the Toronto Stock Exchange with the virtual market opening, as everybody does right now because of COVID. But there was over 70 million social media hits on people celebrating with us the launch of QBTC on the Toronto Stock Exchange. Recently, however, we were working on building out our research department, and we were approached by Delphi Digital out of the US. We believe Delphi Digital produces second to none the best institutional research on the digital asset space and the crypto space in the world. They have taken a small ownership position in 3iQ, and we've signed a multi-year institutional agreement with Delphi Digital. Delphi currently, and you can get these on our website, copies of the State of Bitcoin and the Future of Bitcoin in 2021, and the State and Future of Ethereum as well. The Bitcoin Fund today, as I mentioned, is over $1 billion of AUM. It trades significant. In the big trading days in January, we were trading upwards of 150 to 200 million shares a day. So by far the most liquid fund of its type. There is a player in the United States significantly larger at 20 billion that has more volume. But we've been able to certainly capture our share of the market. We also in December launched the Ether Fund to capture the second digital asset developed in Canada that powers the Ethereum blockchain. The Ether Fund was launched at $10 and has more than doubled in the first month and a half of it being launched. It now has crossed over $280 million US, I believe. Having said that, the really exciting one I mentioned before is the 3iQ Global Crypto Asset Fund. The Global Crypto Asset Fund has gone from a low of $4.97 to a high of over $35 in the last year and a half. An extraordinary expansion for a fund that invests in Bitcoin, Ether, and will be opened up to invest in other digital assets of superior quality. So finally, we encourage everybody to log into our website at 3iq.ca and register for, we have two really cool things. We do have monthly reports on our different funds for you to follow them. Two, our website will show you the amount of Bitcoin we own, and we also publish the kind of top cool as crypto digital asset events that happen in Canada over any given week. And we've crossed over 10,000 users of our webinar, of our newsletter. We are hosting a webinar tomorrow. You can find the invitation for that on our website as well, which will spend a lot more time going into the actual mechanics of the Bitcoin fund, why it works, why we believe it's the most powerful fund of its type in the Canadian market. So with that, Victoria and Tina, I'm happy to open it up for questions.
Yeah, thanks. I'm glad that you mentioned your newsletter. I was going to bring it up. I've spent a lot of time on your site as I was preparing for this conference, and I found it really helpful. So anyone who wants an update on everything current that's going on in the cryptocurrency space in a very easy to use format, definitely sign up for 3IQ's newsletter. I found it great and extremely helpful. So I guess a few questions. So first of all, well, I guess can we start one? Can you maybe just talk a little bit about your views, on cryptocurrencies and Bitcoin as we head into 2021 and some of the catalysts that you think we're going to see going forward?
Yeah, certainly. There is a lot of talk about the institutionalization of Bitcoin, and we're seeing every evidence of that. We're not quoting on $1 or $2 million positions now. We're quoting on $100 to $200 million positions for our funds. We are discussing things with pension funds and institutions. They are very happy with the regulated status of our fund, and we expect that we will be, the fund of choice for these people. But the real trigger in November of last year was when the U.S. Federal Reserve came out and said, we can print infinite amounts of money. And you could just hear the collective, oh my gosh, everyone around the world going, they're going to print unlimited amounts of US dollars. That can't be good. I've got to buy some gold and I've got to buy Bitcoin. And a lot of people will have seen the ads we ran. If you love gold, you'll love Bitcoin. We're not like our US competitors, it's Bitcoin or gold. We think everybody should probably own both. However, what we have seen with Bitcoin, because of Bitcoin's supply schedule of being a decreasing supply schedule, every time you have a halving, meaning the supply of Bitcoin gets cut in half, you see the value of Bitcoin go up tenfold. So we saw it go from 100 to 1,000, 1,000 to 10,000, and 10,000, we're on our way to 100,000. So like your previous speaker, I'm not sure we'll see it this year, but definitely we'll see 100, we believe, in the next 2 years. And then following that, there will be a run from potentially 100,000 to 1 million. And a lot has to do with the scarcity of assets. And I try and explain it this way. Right now, gold grows at 4% per year. And that shows its scarcity and its strength as a hard asset. Well, Bitcoin also only today grows at 4% per year. So the scarcity of gold and the scarcity of Bitcoin in terms of a supply figure is exactly the same. However, we all know that the computer program will reduce Bitcoin supply to a 2% per year growth rate in the next 3 years. So now you're going to see Bitcoin growing at half the pace that gold grows at, and therefore people will start to chase it. There's only 18.9 million Bitcoins out there, and there only ever will be 21 million Bitcoins ever minted. So I think the stat, which was pretty astonishing to us when they showed it to me, 3IQ basically purchased the entire supply of Bitcoin that was created in the month of January. So it just tells you, how much, how scarce that asset's going to be. And you got to think about it. Bank of Nova Scotia, has a Bitcoin ban. Raymond James has a Bitcoin ban on in Canada. In the United States, you can't buy it at Merrill Lynch or Goldman Sachs or JP Morgan or Morgan Stanley. What happens when these people come to realize that Bitcoin is nothing more than the most powerful internet technology ever invented? So we expect, the road to 1 million is going to be there. Can't really put timing on it though.
And you mentioned speaking with, some of the larger institutions and the pension funds. So and also how hard it was to get through the regulatory framework. So there's still a lot of institutions that aren't allowed to own cryptocurrencies outright and do need to look for regulated, I guess, sources to get exposure. So I guess, how do you see that evolving over time? What conversations are you having with these funds in terms of, opening up to be more regulated, to get exposure?
Well, so first of all, our largest clients are Canadian mutual funds. Any global macro fund or tech fund, or the good ones anyways, have already, we've been in discussions with, we do private placements with them, they get their Bitcoin exposure, and it can be comfortable because it's in a regulated TSX exchange traded product. So it's legal, it's, we look at it, the challenge was a 4.5-year due diligence session with the Ontario Securities Commission. And as we say, 10,000 pages of testimony. So it was not easy. We really took the line of the entrepreneur. I sold my country home. We downsized the house. Didn't buy our kids new shoes every month. Whatever. No Air Jordans for the boys. But, we knew that the upside, would be very successful. And the real challenge was how do you get Canadians? Most of Canadians' net worths are in their RSPs and TFSAs. And for the demographic that buys Bitcoin at the beginning was 30 to 45-year-olds, saving and buying Bitcoin in a TFSA has been an absolute godsend for them, because if you believe your asset's going up 10x, well, you want to shelter that one, as far as we're concerned. So, but the fact that it's regulated now, we will be passporting this onto different exchanges around the world. We're really excited to have our fund trade 24 hours a day. We think, our real challenge now is, how can I let the regulators, we need the regulators to regulate our exchanges so I can give Pam Draper a big chunk of our money. We already know that Netcoins works with us on a number of different ways in a bunch of different products. We do know, a number of the other exchanges in Canada and the OTC trading desks and the custody solutions in Canada are not there yet. So here's Canada got $1 billion fund behind them, and I can't use it yet to support the infrastructure in Canada. So we're excited to work with regulators to help everybody move this forward.
And then so then you mentioned mutual funds being your largest customer. So what would the split of your fund look like in terms of institutions versus retail?
It's literally a third, a third, a third. It's Canadian institutions is a third, retail is a third, and US hedge funds are a third.
And then just in terms of catalysts and what we should be watching for going forward, any new kind of innovative funds in the space that you guys are thinking of, or things that we should be looking for from 3iQ?
Yeah, well, 3iQ, since the beginning, Victoria, we always had people that say, well, I'm not going to buy Bitcoin until I can go to Starbucks and buy, a coffee with Bitcoin.
Yeah.
I always just shake my head and say, it's like going into Starbucks and say, I've got a bar of gold here, or Canadian maple leaf, gold maple leaf, and I'd like to buy a coffee with that. Yes, you could technically, and if they took it, then you would, but you're not going to use your store of wealth. I've got, a story where one of my best friends got married in Venice back in 2014 or 15, and we had a big dinner one night, and we were at a restaurant, and they said, we take Bitcoin. And so, the bill came around after dinner, and I looked at the thing and I said, well, how much Bitcoin for dinner? And the guy goes, well, 7 Bitcoin. 7 Bitcoin, yeah, here, take my phone and go bing, I'm treating everybody to dinner. It's just 7 Bitcoin. Well, 7 Bitcoin today at $50,000 in Bitcoin is probably easily the most expensive dinner I ever bought. And certainly it would be the most expensive coffee you would have ever bought. Again, it all goes back to the first 2 pizzas that were bought that are now worth hundreds of millions of dollars. So you don't spend your store of wealth. So money is going to digital, but it's going digital Canadian dollars. We own a company with Maven Net Systems called Canada Stable Corp. We have launched a Canadian dollar QCAD. It is available on a number of the exchanges you spoke to today and talked about. So if you want to hide, you can hide in our digital Canadian dollar. But we will announce many exciting developments in QCAD in terms of places that will accept now digital Canadian dollars and wallets that will have digital Canadian dollars. And you'll be able to send digital Canadian dollars around the world for free. So we're really excited about that. But on top of that comes then for the entire decentralized finance theme, DeFi, which people say, which has to do with Bitcoin lending, Ethereum lending, USDC lending, QCAD lending, where we can literally create an investment vehicle that buys Canadian dollars, digital Canadian dollars, lends it out, and collects an income of 5 to 7%. And you're 100% backed by Canadian dollars. So that looks a lot more attractive than savings accounts that are offered by the chartered banks today. So expect 3IQ not to be sitting on their hands, but to come up with some really exciting products in the next years to come.
Okay, and just before I let you go, there is one question that I did just want to get to. An audience member asking, can the shares be redeemed for actual crypto at some point? They heard that this was possible, and if it is, how does that work?
So first and foremost, our fund is redeemable monthly at a 5% discount to net asset value for the Ether fund, and 5% discount to net asset value, or 5% to trading price, whatever's left. But it trades at a premium, so I don't know why anybody would redeem it. You might as well sell it at a premium and buy Bitcoin. A couple of things that are important. We do have something in Canada called an at-the-market offering. So our fund is in the market making every day. And every time we're adding money to our fund, it's growing the amount of Bitcoin that's accretive to current unit holders. So if we continue at the rate that we did for January, we added 1.5% more Bitcoin to our fund over the net asset value, which means you're getting Bitcoin plus a yield by owning our fund with the at the market in place. It's not always possible, but if it continues at this, it's a positive carry. So, you know, our fund has really been structured well to be able to take advantage and compete against direct ownership, but more so, it completely reduces the cost. It eliminates the cost of the management fee and the expenses to run the fund. So I don't know if that answered your question, but.
Yeah, no, it did. Thank you for clearing that up. That was very helpful. And this question, the next question, actually, it's unrelated. But have you heard or do you think that people leaving Hong Kong is one of the reasons for the recent surge in prices?
You know what? And I'll tell you this, I've been in Bitcoin for a long time, and I've looked to find a reason why Bitcoin does anything, right? Today, for example, we're what? $187 billion of Bitcoin traded worldwide. You know, Bitcoin moved the most when North Korea would launch missiles over the south of Japan. The South Korean and the Japanese Bitcoin exchanges went crazy. People were where it would buy because of that. When Argentina has massive inflation, of course, in Argentina, you're going to be buying Bitcoin. If there's a military coup in Nigeria, of course, you're going to be buying Bitcoin, or problems in Crete or Greece. Bitcoin is two things. It's a risk-on asset, and it's also a risk-off asset. So it has zero correlation to anything. Moving Bitcoin around from Asia to North America is, shall we say, a highly trafficked area. So there is some, but it really is the institutionalization. In our webinar tomorrow, we'll show that the amount of people that now own Bitcoin greater than a year is growing dramatically, which means people are buying it and hoarding it. And there's so little Bitcoin available. As I said, you've got to come on and get on board before early. One of our early pioneers and a good OG in Bitcoin is a guy by the name of Chris Berniski. And Chris tweeted recently, he says, he's saying, no, it's true, you're not early, but you're still not too late. So there's still time to jump on the bandwagon and make significant returns in this asset class, because this asset class will go on for decades.
Okay. Well, I think we'll wrap it up there. That's a good way. That's a good way to end the conference for sure on those words. But yeah, I mean, if anyone wants to sign up for 3iQ's newsletter, again, I find it extremely helpful, very informative. It sounds like you guys have a webinar tomorrow, which we can all look forward to. And I just want to thank you again for coming on. And we're going to be, watching news coming out over the next few months and see what you guys are up to.
Thank you very much for having me, Victoria. I appreciate it.
Okay, thanks so much. And thanks everyone for joining us today. You can view any of, the replays. They're going to be up on YouTube. If you did have a question that didn't get answered, again, just email myself or email Adelaide Capital and we'll try to get you the answer. Okay, thanks again.